Hey, everybody. I don't know if anybody's in yet. I don't know if we got a waiting room set up or how today is going. But if you can hear me, let me know in the chat window. And we'll get going here at the top of the hour. All right, welcoming everybody in. Still trying to figure out Zoom on their waiting rooms and all that good stuff, but actually scheduled to take a class over the next couple of weeks, one of those recorded classes. There we go, starting to get our first chats over here. Getting everything ready. Catherine should be on here in just a minute. All right. And then what we think is going forward, instead of doing these as webinars for the tax mentor group, we'll do them as meetings. It'll allow us to basically have you ask the questions live. We'll unmute people one at a time and do it that way. I think that's the more interactive way to go with this. But I definitely want to take a couple more classes on Zoom. Every time I think I know it, they change something. So get in there and take a look at it. And Catherine just sent me the new PowerPoint. I wanted to take a look at it here. Actually, let me make sure Catherine got her invite. All right, let's get Catherine. I don't know that I ever sent her a link. All right, we still got 15 minutes, so we won't be getting started till the top of the hour. And hello to Robert. And while I got everybody here, let me kind of just keep things moving along. This isn't required. This isn't really part of the webinar, but one of the discussions we had in the past week is if I wanted to go out and hire an enrolled agent with maybe 1 or 2 years of tax prep experience and a little resolution experience, somebody that I can kind of bring into my practice, not as a ready to go person, but as a enrolled agent, base tax knowledge, a little bit of resolution, to hire them at 40 hours annually, 40 hours a week annually, so either a salary or an hourly wage. What do you guys think an enrolled agent, with those credentials? Let's say they've been working at an H&R Block or a Jackson Hewitt for 2 years, have a good number of tax returns with, maybe a couple of full pay installment agreements under their belt, a couple of 433s completed. What do you guys think the going rate for that might be? And And that phone call reminds me that let me go ahead and get all my phones out of here. But just curious, yeah, 75 to 85,000. Where was that when I was just working as an EA? That's definitely good money right there. I will be right back. All right, and let's see here. And as you kind of throw the prices up, maybe let us know what part of the country, because I know somebody in San Francisco is going to make a lot more than somebody that works in, North Florida, where I am, just, based on cost of living and all that. But what my research is showing is it's somewhere between 30 and maybe 55,000 on the high end for a newer enrolled agent with a couple of years of tax experience and very little resolution experience. And of course, the biggest thing you run into with enrolled agents is most enrolled agents are their own entrepreneurs most of the time. I mean, maybe not most of the time. I saw a statistic somewhere back when I was managing tax offices that I think at one time H&R Block was had 25% of all the enrolled agents or 20% of all the enrolled agents. So oh, that's funny. So whoever had just responded about the 75 to 85,000, that was what they would want to make as an 80-hour a week CPA EA kind of working for themselves. So yeah, I would say that's underpaid, but for those kind of credentials. But kind of, if you wanted to add somebody to your practice as you start moving into tax resolution, what would the cost be for a, somebody with a credential? And then obviously a lot of people hire people without credentials to talk to the clients. And the question is, if you had to hire an enrolled agent, let's say they were an H&R Block or a Jackson Hewitt or just work for a CPA firm, worked there doing taxes for 2 years, had very little resolution experience, how much would the going rate be in the part of the country that you're in? And that was a discussion that Laura and Catherine and I all had earlier. And just kind of filling in the time for another 10 minutes while we get ready to get started. And again, I think going forward, we may start doing these as meetings so we can actually engage. I'm looking at putting a big TV screen up above my computer screens to where I can see everybody, or at least those that are willing to share their cameras. Everybody here is, 40,000. Somebody's got $40,000 for an enrolled agent with 2 years good tax experience and just very little resolution. That was kind of the range I was guessing. Kind of 40 maybe to 50, 55. Yeah, a couple of people talking about the $15 an hour minimum wage, and yeah,
it's common.
I think that's going to be here. So hi to Catherine. Catherine's on, and we're just kind of talking about what we think enrolled agents, the value on the market is. Honestly, if they raise minimum wage to $15, I got to think an enrolled agent, it's got to be worth at least a $10 premium. But then now you get into the whole economics discussion of, do you start controlling and setting prices, and what does that do to the rest of the market?
I think it's going to take time for the rises in hourly wages to make their way up to the exempt employees, but it's going to happen. Hey, Robert. I mean, thinking about what the res firms are paying at a minimum 40 just getting in the door. That's low experience.
Yeah, and we think that's actually going to go up. I mean,
I agree.
It's I just came out of the job market, but I was looking for a Catherine, which obviously a Catherine is more than $20 an hour. She's somewhere around $20.50 an hour. But the price for experienced tax resolution people is it's what I thought it was, and I think it's going to go higher as things get busier, which I have no doubt that things are going to get busier. People talking about freelancers, which, that's one thing I like, but having hired freelancers to help us with programming, here 1 minute, gone the next, they tend to go to the higher bidders. We've had a couple people that we really liked as programmers that wouldn't come on board. We're offering very competitive wages, basically, I think where this company's growing to, it was a wonderful opportunity. And, it kind of going to the highest bidder right now. And it's kind of, are you in it for the long run or are you in it for the short run? And just my experience in dealing with programmers, I think most programmers are in it for the short term. They're into it. What's in it for me today, not what's in it for me in 2 or 3 years. So, yeah, and then obviously freelancers and the data security issue is quite big out there. The other thing is freelancers. When we ran our tax business, I got into some contracts with some CPAs that didn't have other opportunities or just become available. They didn't want to be employees, but they kind of wanted that freedom to still kind of do some stuff on their own, but were willing to do some complicated tax returns for us, and it never worked out. I kind of wish Laura was able to join us today, but she's going to man the phones. It's December. It's busy. It always is. And it's they tended to work when they wanted to work, not when we needed them to work, if that makes sense. So yeah, I think freelancers are a solution, but boy, you're risking that, they don't work for you. They work for themselves, and they're the first ones to tell you that. So I can tell you, when I was at Jackson Hewitt managing my dad's franchise in Atlanta, we built and I'm a huge believer. So if you have a tax office, I'm a huge believer in developing internal talent. And the first thing I did when I took over managing their Jackson Hewitt franchise was they had this pay structure where everybody got a raise, like a quarter for this, a quarter for that, and $1 here and $1 there. And it was so convoluted. I mean, we had people that couldn't spell tax making $14 an hour and some really sharp people making $9 an hour. So we kind of looked at it and said, what was our goal? Let's see here. Laura's got a question. Let's see. Laura says there's a lot of people calling, said that they never got an email to join. We sent an email out, didn't we, Catherine? About this one?
Pretty sure. Yeah, I think we sent a couple of emails.
Yeah. So, if somebody didn't get an email, well, I'll show somebody during the course how to make sure they get signed up. And a lot of people will spam our emails because they spam a lot of things, and then, they don't get what they have. So let me tell Laura it's not too late.
I think we sent out an email 2 weeks ago, and we sent out an email Tuesday.
Yeah, and I posted it to the Facebook page this morning. And they can do it now. And it may have not looked like a THS because we kind of did it a little bit more under the Tax Mentor branding, I guess. While we're spinning up. Yeah, definitely. But what I did, and use this as a suggestion. I can tell you, my last 2 years at Jackson Hewitt, we had 100% retention, and it was 100% retention of everybody we wanted to keep. And it was a very simple pay structure. I want to say back then we were paying $9 an hour for a first year, $10 an hour automatically when you became a second year because you were experienced. After that, you got $1 an hour every time you passed a part of the enrolled agent test. And what we found is a lot of people would go out and take the ethics part, and we paid for all the training through GLIME, and we paid for your test. And once you became an EA, we paid for your NAEA membership, and we paid for your annual CEs, which was usually just the IRS Forum back then. It wasn't a lot. And we ended up we had 20 offices, and we ended up having over 25 EAs and CPAs that worked for us. And it was developing internally. What happens is people would take that first EA test, the ethics, because it was the easiest one, is the general consensus, and they'd get that $1 an hour raise. And that was what got the raises. Other people would come and go, look, I'm former IRS. I want $15 an hour. I'm like, you should already be an EA, so it just migrated into that, where we built our internal development on getting people to be EAs. Now, do some of you have non-EAs working in your office creating 433s and such? Absolutely. And I guess the other question is, somebody that really knows what they're doing, what's the best way to describe them? They're almost like Catherine, help me out. What are the people called that are the assistants to attorneys, paralegals?
Oh, yeah. Yep.
So think of the equivalent in the tax industry. They really don't have a certification, and I know some paralegals do, but let's say you're a tax person, wonderful experience, can complete a 433, but you're not an EA. How much does the premium affect your pay for becoming an enrolled agent? I got to imagine I would pay somebody close to $10,000 more a year if they were credentialed versus not credentialed.
That's fair. And then they'll also go from hourly to salary. So there's a different pay structure involved.
Yep. Oh, and for those of you getting on and hearing us talking, we're just chatting. This has not started. So we kind of let everybody in early, and we're just kind of talking about how much we think enrolled agents.
Yeah, but for every 5 of those people you try to train to be, your assistants, your paralegal substitutes, maybe 1 or 2 actually has what it takes. It's not an easy industry.
Yeah, it's not something you can teach everybody. They have to be very.
Some people get it, some people don't.
Yeah, and very detail orientated, obviously. So, and they got to have the right, personality to talk to the clients, and
have to be efficient, effective,
and smart, and good with numbers.
But people who are smart want to be paid more. It's a never-ending tug of war.
Absolutely. So, and we'll get started here at the top of the hour. And Catherine, I think before you were on, I was telling everybody, I think where we're going to go with this, and Catherine and I were talking this morning about it, we're going to start doing the meetings on these and see how it goes. We may have to switch back to the webinar format. Today is webinar format, which means I can't turn on anybody's microphone, but I'm in the process of, I've decided I'm going to go ahead and build a studio out with a big screen above my computer monitors. I'm going to get a little stand-up desk where I can actually stand up and do presentations here in my office. And I want to be able to see everybody. I've seen some other people doing it where they can actually see people and call on them and, unmute their mics. So that is something that we are going to look at, going forward and working on. And, but good conversations. And again, like any of these things about tax, we hope that the people attending give as much as they get. In other words, a lot of times, we have, Catherine and I have this knowledge base, and granted it's a lot, but it's by no means equals what all the attendees on here cumulatively know. I think if you kind of put everybody in, it's there's things that we don't know. So we're here to learn as well from everybody else, but kind of get the community going forward on this. And we'll kind of describe, where we see Tax Mentor going, because there's definitely been a need for consultations based out of just doing tax help software and the reports. I've seen that there's a gap between, getting the report and then, how to apply it, the best way to go, interpreting. And, there's still a little bit more to it. The reports aren't the end all be all. So, and for those just joining us, we're not beginning, we're just having a general discussion about EAs and different formats for the meeting while we're waiting for everybody to get in. And Laura said that there's quite a few people that are registering right now. So we'll give everybody till about 2 minutes after. So about 2 more minutes and we'll get started. And Catherine, you want to go ahead and share your screen, and you've got the PowerPoint, so you can.
Yep. Give me 1 second. Pull that back up.
And I think you should have the ability. Let me know if you don't have the ability to share it. And I think I can get in here and give it to you.
You disabled me.
No, didn't disable you, but now the question becomes, how do we? Yeah, let me see here. Meeting info, stop recording, share computer sound. All right, let me go to share. Here we go. Here's the share, advanced. And you did come in as a panelist, correct?
Yes.
All right. I may have to do the videos for you.
We're all in one folder.
This. Yeah, we're able to do this the other day. Let me see if it'll let me. Let me see, remote control. I can give Catherine actually mouse control to my computer.
Let's not make it complicated.
Yeah, no, I'll do it. And yeah, for some reason, it's not an option for me to have Catherine share the meetings. Here we go. Maybe it's on here. Share screen, side-by-side mode.
I agree. It is amusing. We should go on tour.
Absolutely. All right. So let me get in here and I will open up Catherine's presentation, and it's Dropbox, Tax Mentor. And what did you have it under? I don't have the Skype up on here.
2020.
Okay.
Consult webinars and today's date.
There is, and 12/3. And we're going to start with the brochure first.
Yep.
All right. All right. So we're going to go ahead and get started. And I'm going to go ahead and run the slideshows for Catherine. And let me switch it around here. All right, so I'm going to go ahead and get things kicked off with this portion of it, and Catherine, jump in at any point. Well, let me ask you, did you want to go ahead? I know we kind of worked on this together.
Have at it.
Gotcha. All right, so what we've got is Tax Mentor, and basically you can't afford to miss out, right? And a little bit about what it's about, and then we're going to jump into the actual what the twice monthly meetings are going to entail. We're actually going to take your questions and answer any questions you might have, and we're going to do 2 case studies today. But kind of the conversation we had early before everybody was on, while we were just kind of waiting to start, is what does an experienced enroll agent cost per year? So if you're going to start doing tax resolution and you're looking to add a licensed credentialed person to your practice, what are you looking at adding? And kind of the interim, what we kind of came up with is around $50,000 per year. We kind of guessed anywhere from about 35 to the high 50s based on experience, year round. And again, a varying experience, different parts of the countries, but the point is they're not cheap. And, just to give you an idea, Laura was making $20 per hour in 2012 when I left Jackson Hewitt. Now, she was an office manager and had other responsibilities, but Lord, I'd love to have Laura at $20 an hour right now. And I think most of you would as well. For those of you who don't know who Laura is, she's the general manager of Tax Help Software. If you call for support, just to get quick questions answered, she's the one that does it. And she does a wonderful job with education. She actually was our education coordinator for 5 years at Tax Doctor, which was a Jackson Hewitt franchise in Atlanta. And when those stores were purchased by corporate, she then worked with the corporate national offices for training, because a lot of the programs she developed were that good that they wanted to roll out nationwide. So what Tax Mentor's going to do for you is a couple different things. So on the annual license, for less than $32 per consultation, Tax Mentor diagnoses the case and provides a resolution strategy. The cost for a THS user is going to be $747 a year for 24 consultations. That's 2 per month. Right? And that's promotional pricing. That's $250 off what it would cost for anybody that was not a THS user. Okay. We're also going to have twice monthly live Q&A sessions to answer case questions live. Now, part of that's going to evolve here early on. So today, what we have for you is 2 current case consultations that we've done. We're going to go over what we did, what our thought process was, and also answer your questions about those. And when we're done doing those 2 case consultations, we're going to take your questions. So the way that this is done, that Tax Mentor has done, is it is not call us with follow-up questions. Don't call us to explain something. Don't send us things other than transcripts. That's not how this is going to work. It's not, we're not going to work the case for you. What we're going to do is we're going to look at all the data present. We're going to have the form similar to the one that you're filling out now, but with a couple more detailed questions, such as what is the state debt, and those kind of things. And what we're going to do is we're going to tell you how Catherine, myself, Bill Nemeth is going to start doing some of the consultations for us, how we would proceed with the case, and the things that we discovered. I can tell you right now that Catherine has gone above and beyond what I envisioned this to be to begin with. I was going to do, analyze the CSEDs, and she's taken it to a whole new next level. Most people are going to be able to start working the case after looking at the consultation. Okay. So along with this, you're going to get at least 12 hours of free CE, CPE annually. Tax Help Software has always done that. We've also partnered with ASTPS and Era Green to offer some stuff for free. That's not going away. All right. Additional consultations will be available for an additional charge. So we've also had inquiries from very large organizations that have talked to us about what would our capacity be for doing large scale consultations, basically taking over the onboarding process in some sense for their clients. Basically, they would get the transcripts and we would, basically direct their people how to begin. And again, if you're just getting started in this industry, it would literally take you tens of thousands of dollars and hundreds of cases to achieve the level of expertise that you're going to get out of each consultation. Okay. Understand sometimes those consultations are just going to be, hey, this is a full pay. They owe $7,000. They make $300,000 a year. There's 9.5 years on the CSED. This is a full pay. However, look at first time penalty abatement. It looks like they qualify for this year. So you are getting some of those value adds that some folks would miss. Okay. And then for experienced tax professionals, it's a second set of eyes reviewing your complex cases or saving you time. Okay. We're going to have some add-ons to this as we get going. We've talked about doing where maybe if you did want to talk to Catherine, it would be based on an hourly rate. It's not going to be cheap. But then again, talking to any tax attorney isn't cheap, but there's going to be those options out there. A lot of people reach out to me to do CSED calculations. Hey, confirm my numbers or check this. That's not anything that's going to be included in this. We'll talk the general CSEDs that are, in the transcripts and from the calculations, but advanced CSED consulting will be an additional charge and it'll be based on the year. We haven't set the price for that. I'll have to look at what makes sense for everybody involved. So that's a little bit about, where this is heading. The bi-monthly or twice monthly meetings, that's where if you have follow-up questions on some of the cases that we've done, we're going to be available. Catherine and I are going to be available, at least one of us at a minimum. Laura would be somebody else that would be on those. We plan on having guest speakers. I can tell you Jeff Long will be somebody that we bring in and we'll focus on leads that week. I'd love to have Larry Lawler come on and speak to some of his specific cases, have Eric Green come in with the Tax Rep Network and speak to his. I've already had a couple of people reach out and say, are we competing with a lot of the people that we have partnerships with, NAEA, ASTPS, Tax Rep Network? And the answer is no. What we have developed is a complementary product to what everybody else offers. The work that Tax Mentor is offering is basically all the training that we've been doing for others. We're just kind of formalizing it here. We tend to do a lot of case consulting through THS, but we're not equipped to do it. We don't have E&O insurance. Laura really, unless she logs into your computer, can't take a look at a case. It's not very efficient. So that's what this is here for. Okay. It's to kind of add what we've always done. We're not adding anything new to what we've been doing. Okay. What we're doing is standardizing a process that we've been doing for a long time. We're still going to do free webinars for ASTPS and Tax Rep Network and NAEA and NATP. Okay. In the research and investigative space, which is coming up here shortly on one of the next slides, most people have come to us for the training on that scenario. So what we're trying to do is formalize that training across the board for everybody. So, and again, Tax Mentors consultation will take you to the research portion and the interview portion. After that, the members of ASTPS and Tax Rep Network, you have your phone consultations that are available to you in some cases. Showing up to Larry Lawler or Eric Green with one of our consultations already done, all the grunt work's out of the way. Now you can focus on the magic that they do with the 433s and those kind of solutions. Let them focus on where they can make the biggest difference. Okay. So what we've got here is the tax resolution case profitability. All right. So what Catherine and I came up with is our average case is about $4,000. Michael Rosberg's probably rolling over right now if I say the average tax rep case is $4,000. This is kind of what we kind of came up with as an average. And remember, Catherine's coming out of the resolution industry with a big firm. There are cases that generate a lot more revenue than this. We're just kind of using an average case without getting into too many of the details. And what we broke it down to is most people just getting into resolution don't have huge lead costs. They tend to just be customers that you already have. So we've got the lead cost at 10% of your cost. It may even be less than that. You may be doing a little bit of marketing. We have your overhead payroll being 75% or upwards of $3,000 of working the case. Okay. Could be more, could be less, but payroll is your one single biggest variable. Your lead cost is going to be fixed. You will know what your lead costs are very quickly. Okay. The only one that you can adjust is working each case for less time tends to be the one that increases the profit margin. And right here, we've got the profit margin on an initial $4,000 case that is at 15%. You're making $600 on a $4,000 case. The purpose of Tax Mentor is to take some of that labor off of you. And what we've got is an automation here. And what we're going to do is our goal is to shift your payroll costs down to where you're spending, 25% of your cost of the case is now payroll, and your profit margin has increased significantly. Okay. And let me see here, automated again. Let me go to the next slide. And what we've got here is we basically have a $2,000 increase in profit. Is this going to be every case? No. Is this just kind of a sampling across the board? Absolutely. The less time you spend on a case, the more money you're going to make. The three variables are how much do you charge, how much to get the case, which is your lead cost, and your overhead to work the case, right? And this was solely created to lower your operating costs in labor. Okay. Also, reduce your overall training, because as much as there's going to be an overload of tax resolution cases out there, there's going to be a large number of tax prep offices that want to perform these services for their own clients without sending them out the door, but don't want to spend the tens of thousands of dollars and years to get good at this. They're basically going to want us to refer the case. And in some cases, we'll be referring back saying, I would find a tax resolution expert in your area. It's going to be beyond your capabilities with where you're at. Okay. And we do expect to do, if somebody's on our twice monthly meeting, you could shop some of your cases around to the other members. I'm trying not to get where I recommend specific people because it leads to too many, like that person charged too much, or they said this about my client, or they stole my client. I'd rather have the people that are members of Tax Mentor to network amongst themselves and find those kind of partnerships. Okay. But again, the goal is to reduce overhead costs by being on track from the beginning. If you misdiagnose a case or miss something, you are basically doing two resolutions. Think about the cases where you go through, do the offer and compromise, and a year later, the case is now back on your table and you're having to start from scratch. Their income and expenses have changed, especially coming out of COVID. Now you got to decide, do I go PPIA? Do I go full pay? What do I do? The number one resolution option that everybody thinks they're getting is now off the table. You're now doing twice the work. Catherine and I are giving you our feedback of, do we think this is an offer candidate based on looking at last year's tax return data? You never know until you do the 433. I love people that call us up and go, how can I make the 433 in tax help software just do an offer for $1,300? Like, well, you complete the 433, and if that's what it comes up as, that's what you do. It's not a negotiation. It's not a hostage negotiation where you're like, well, this is what I think I can get, or a car negotiation of, well, you want 25, I want to pay 21. It's not some made up number. It's based specifically on some calculations. Now, I think Catherine would do a much better job than a first year tax person doing their first 433, but that's based on her negotiation skills, not on the 433 itself. Okay. Remember, the 433 should be considered your initial offer. Okay. I fully believe that the folks that start to leverage this service and build it into their workflows, you're going to increase your profit margins by up to 50% per case. And honestly, I think some folks, especially the very new people, will actually be more than that. I talk to a lot of new people, and these are people that have kind of gotten out of the boot camps and out of initial training at any EA. And it's just so much data. Should I file the CDP? Do I do an equivalency hearing instead? The answer is it depends. And a lot of folks will go to Facebook for the answers. And Facebook is a great resource, but I can tell you I'm on a lot of groups and I try to answer. I have seen people put 100% wrong answers that would get you sued up on Facebook. In most cases, you don't know who's answering the Facebook questions. And I have seen people, I sent Catherine some since she started on with us. And Catherine, your thoughts on some of the cases I've sent you and the responses on Facebook?
It's a little scary. The one you sent me yesterday, I'm looking at it and I see 5 different ways it got off track, and now the amount of work that they're going to have to put in to get it back on track is kind of kind of scary. It's they're increasing the workload instead of doing it right from the beginning.
Yeah, and understand my purpose. If I end up mentioning a case and you think it's yours, I'm not ever doing anything to call anybody out. It's a function of there's better options out there sometimes. There are a lot of people that work their cases on Facebook, and there are some great answers. I'll answer questions on Facebook sometimes, but I tend to offer, hey, I got a quick question. It's not, hey, here's a 42-page diopsis of my client's status and everything else, because that's not everything I need to know about the case in order to render an opinion. And so it's something just to be aware of. Facebook is out there. It's what a lot of people tend to go to, but you also are dealing with the confidentiality. Think of this: if you're getting new to this and you start posting some questions to Facebook, some of them might seem, I've seen some experienced people hammer some new people. So the other thing we're going to give you is we're going to give you that confidentiality. So we're going to respond to your case. We are going to show cases, as the workflows as we're fixing to, but we're not going to say, let me tell you about, what this person thought. We're going to give them to you how we would work the case. Okay. So it's definitely going to help out with that. The other thing that's going to happen is by reducing the time that you have to work a case, okay, you can work more cases. So we worked a long time on these automations. So let me play this one up for you. These are the ones that are about to go on the new website. And by the way, taxmentor.com is not up yet. It will be up shortly. And the side-by-side comparison here of that is we're reducing your interview and research times by 30%. And we literally went through some real cases and looked at what this is. And remember, Catherine managed teams when she was working for the big resolution firm. She saw what having practice and procedures did. Catherine was also one of the very first people to see the impact of what tax help software could do for a large firm. Matter of fact, the firm that Catherine and I worked at, they spun up right after all the big ones got sued by the inspector generals. Ronnie Deutsch had gone under, Tax Masters, J.K. Harris. They had all just gone away, and the group that we worked for out of Jacksonville became the biggest. They kind of filled a gap, became the biggest, but they were struggling with the same issues that they had. And it was how to get the information in a consumable format. And when I showed up and they ended up finding me kind of mutually through Tax Help Software, I was literally 30 minutes up the road from their office when they found my little website. When we integrated into them, I mean, Catherine, just right off the bat, labor-wise, what impact did it have once they got that system running within about 10
Oh
months?
my goodness. My efficiency levels went through the roof, not having to constantly pull transcripts, not having to look at each transcript individually. Having the dashboard in front of me was amazing. And I was working business cases at the time. And so being able to check deposits and returns processing, I mean, our capabilities as far as inventories increased by at least 1/3 capability. I think honestly doubled when I think about what they're able to do now with the software versus what they were when it was more manually. The efficiency was just amazing. It was a life changer.
And the purpose of Tax Mentor is to take it to that next level. And the way that that group worked, they would do the onboarding and everything else, and then they would pass all the transcripts and the reports up to somebody like Catherine. Probably not quite up to Catherine's level, actually, probably a little bit less, but an EA or somebody that knew what they were doing, and they would come up with the strategy for the case and assign it to a team. And it's all these workflows that will increase this time. We are talking about, actually, we can't figure out the pricing structure on this, but just to give you an idea, breaking down the whole resolution process down into each section and how it can be optimized. The next level will be how to do the 433s. And is there an opportunity to offer a 433 completion service? And that's something that we're strongly looking at. It would be well into the future once consultations are up, but consultations, I think, are the single hardest part to get done, because if it's misdiagnosed, it's going to cost you money, because you're going to have to do 2 resolutions for the price of 1, depending on how your engagement letter is. And we've gotten great feedback. So the feedback we've gotten from everybody is they would love to have an engagement letter as part of the Tax Mentor consultation, and we are working on adding that feature. The reason the taxmentor.com website is not up yet, we're actually working on everybody that is a Tax Mentor member having their own dashboard on taxmentor.com in which you would log into. So instead of us sending you a link to your consultation, you're going to have a dashboard. You're just going to get an email from us that says, hey, your consultation is ready. You're going to log in and have access to your consultations online. Okay. Here's kind of a little timeline of tax resolution, and then we'll kind of get into the consultations. So get here faster and with confidence, right? Especially for the new folks. And we do see a lot of people that are coming out of the initial trainings, the boot camps, and even we've had a few people coming out of Jason Bowman's group, and there's a lot of training early on, and it's hard to consume. The other thing that we're offering is part of what we're showing in these twice monthly meetings. We're going to do the case studies with real transcripts. And what we're doing that nobody else is doing is when you send us transcripts, they're already redacted. I'm changing all the personal information. They are ready for us to share as part of a consultation. You are going to get more case studies in this than you're going to get anywhere else. Matter of fact, I'm reaching out to Larry and I'm reaching out to Eric to say, why don't you start firing your case study, real cases to us? We'll feed you back the transcripts all redacted with a tax help software report, and you can integrate that into your case studies. It's going to save them a tremendous amount of time. Okay. And again, the research and strategy I think are the two most important steps. All right. Preparation and negotiation and finalization, not to take anything away from them. But at the end of the day, the 433 is a form and there's an art to filling it out. All right. And I think, all these other groups I mentioned, that's where the focus is I've done all the transcript evaluating. Now it's time to get started. What Tax Mentor is also going to do for you newbies is I see oftentimes people freeze and go, I don't know what I should do. That's where this is. We're going to take that decision for you. This is what Roger Nemeth, enrolled agent. This is what Catherine O'Connor, tax attorney. This is what we would do if it was our case with the information presented. So tentative pricing. So just to touch on this, because we've got a lot of questions and everybody's like, well, what if we wanted this or only wanted one consult? So the annual price for somebody off the street that calls us up and says, I want to do this, it's $997. THS users annually will be $747. Okay. Quarterly. So for a 3-month subscription, it'll be $297. We are not going to do a monthly model, right? Non-subscription pricing. It's $100 for an individual consult, $150 for a business consult. And yes, if you fire us off somebody's business case and then turn around and fire their individual case, that would be 2 cases, 2 consults, because it is 2 consults. Okay. Annual license. You get 2 consults per month. They don't transfer per month. So you can't wait till the last month and get all 24 up front. But if you're somebody that's going to need more than 2 per month, that's what we're working on, is kind of that bulk pricing model. We have 24 consults total, 1 business case per quarter. All right. Business cases require a lot more work. And so we're going to offer 1 case per quarter. For quarterly, you still get the 2 consults per month, 6 total consults, and 1 business case per quarterly subscription. Okay. And those are our thoughts on the initial tentative pricing. We're fairly confident that this is going to stay pretty close to the annual fee is what it'll be. And we may have some upgrades to that. So we may have ones that offer more package business cases per quarters, or actually buckets of other cases to purchase. Like if you want us to do your onboarding. And when I say onboarding, we're not going to talk to your clients for you. You're going to still pull the transcripts. You're still going to get the 28, 48, 88, 21s, and then you're going to get them to us. And then we're going to respond back with how we would work the case. All right. So that's the end of that presentation. And Catherine, before I close that one up, did you have anything on that one you wanted me to bring up?
Nope.
All right.
Nope, we're good.
So, and now let me open up which case do you want to do first? I have an IMF levy and an IMF RO.
Why don't you start with the IMF levy?
Okay. So I'm going to open this one up. And get the slideshow going. And do we have any questions before we get started? And not specific case questions, but just where we're at now. We're going to take the specific case questions after we do the case studies. And I'm I'm looking over
Had a few
here.
questions. I think I've gotten to them all.
Okay. Oh, and so immediately this presentation will be posted on the THS best practices. I'll probably do another section at the bottom so as to separate these from the THS best practices. Today, if you have specific tax help software questions, I'll do my best at the very end to answer those. And then also we have one, I think, scheduled for next Friday. So I will add that registration link to the best practices page this afternoon. So the registration for next week's THS best practices, we'll open that one up and you'll start to see separate meetings for tax help software and tax mentor going forward from this meeting. So without further ado, so this one is a levy, PPIA, and CSEDs. So if you see, what Catherine started to do is she started to put tags on each case. We are in the process of building up a library that our members are going to have access to, where you're going to be able to compare real cases that have similar tags to your tags you'll be able to look at. And if things go how we hope, we would hope that the members would follow up, and we're going to have the ability for you to fire off what the actual outcome of the case was. So in our library, we would love to have, hey, the real resolution outcome of this case was an offer and compromise for this much a month. And even get to the point of maybe you can share a redacted version of the 433s. So you can see what ended up working for real people. Like I said, I think there's a wonderful opportunity here to learn from each other and what's actually being done, and also case-specific cases. So without further ado, I'm going to turn it over to Catherine.
All right, you're going to be my my assistant now.
Yes, as always.
You're right. So the consultation report itself comes in an Adobe PDF at this point. You've got your cover page with the analysis and then behind it is the customized consultation THS report. The goal is we want you to have that report so you can see it, but really condense everything in that report to the first page. That doesn't translate so well in PowerPoint, so I've kind of broken it out into different sections. You can kind of see how we get to the final product. So these are all real cases. This one came in just last week, right before Thanksgiving. Intake notes are from the practitioner. So this practitioner uploaded the transcripts, and this is great, gave me information on equity, his income, and there is also a state debt to Virginia. So kind of already setting up, well, should we consider OIC, partial pay? What should we do about this levy, and what should I do with the state? So next one.
Okay.
So the way I analyze cases is I actually always start with compliance. Maybe that seems weird to some people, but when I'm thinking about most options with the IRS, they require that you be in filing compliance. So that seems like a logical place to start. So I first look at my account status dashboard. 2019 is missing, but these transcripts were pulled in June, so it's possible they're not still missing. The more recent the transcripts, the better your information is going to be. We can also see that we've got balances stretching from 2006 right up to 2012. Next, please. All right, CSED. So our 2012 period has a 2028 CSED. As we go through the next slides, then we've got 2024, 2024, 2024, 2024. It sounds like he's probably not the first time this guy's had tax issues and probably got compliant all in one go several years ago. And then next slide. And the oldest year again, October 2024. So we've got the bulk of these balances are going to be expiring in now under 4 years because it's almost the end of 2020. Who can believe that? All right, next slide.
And let me touch on the CSEDs here because the CSED questions tend to come my way. We are going to glance at the CSEDs to see if there's opportunities to contest the CSEDs. But again, if a CSED is 7 years out and there isn't a lot of tolling, CSEDs aren't a great way to attack it. CSEDs have become more crucial lately in that installment agreements under 250 and no RO are now the basis for the number of months. So CSEDs are actually going to play a bigger part. We're going to glance at them and look for opportunities in the CSEDs, but by no means are we doing a full, hey, we're going to do a manual calculation of the CSEDs for every month. So those that have been through our CSED course, and we're going to offer that again in the spring after tax season. We're going to offer the CSED bankruptcy course we had, the one that was a week long. We're going to break it up into two pieces. It's going to be the same CSED bankruptcy seminar, but you are going to be able to buy just the CSED seminar or just the bankruptcy seminar, and it'll be up to you if you want to piece them together. So that will be an opportunity for people to learn about CSEDs. We'll charge to do the CSED for you if so decided. It's and understand this, a lot of people will fire me off a CSED to evaluate. I get it from everybody from a first year THS user that doesn't even know how to spell CSED, and I say that affectionately and kiddingly, all the way up to I've done CSED calculations for, Larry Lawler. I've done them for my dad. I've done them for NAEA speakers. I've done CSED calculations for some of the top people in the country, but that's not anything that we can do for free anymore. They are very time consuming. And, I would rather teach you how to do it and go from there. Now, on our twice monthly meetings, if you have a CSED question, what I don't come to the table and go, hey, calculate these CSEDs for me. I want you to calculate them, but say, what are your thoughts on this installment agreement as a tolling event? Or which one of these tolling events would you attack? Those are the kind of questions that we're going to be able to make an impact and give our opinion on versus, hey, just calculate these for me. I want to confirm that they're correct. It's too much of a time consuming thing to do that. But CSEDs are definitely going to play an instrumental role in everything going forward because so many things now rely on them that didn't rely on them even a year ago. So back to you, Kat.
Definitely. And I've had a couple of cases that have come up where I'll see, hey, that tolling event probably shouldn't be there. And I'll mention it that you should look into contesting it, but it's not a full multi-page analysis of when, where, how to do that. So, all right, so looking at the workflow, this is really just what's going on in my mind is compliance, no, 2019 missing, obviously a problem. No audits or exams pulled up. These are all original filed returns. No appeal options. These balances have been in collections for some time, unfortunately. And CSEDs, we do have CSED strategy, and that strategy revolves around, well, we've got impending CSEDs. It'd be nicer if they were right around the corner, but 4 years is still not a huge amount of time considering how slowly the IRS moves. And so any strategy that gets you to those CSEDs with the least amount paid should be considered.
Yeah, and
Next, please.
me personally, Roger, kind of thing, if a CSED is greater than 3 years, it generally isn't going to impact your strategy for a case. It can, but for most people, no. I'll have people that'll fire me off CSEDs to calculate, and they're 7 years out. Call me in 5 years, not 7 years out. There's too much stuff to do when they're that far out, if that makes sense. And then one other thing I wanted to point out about one of the things that Tax Help Software gives Catherine an opportunity to look at as well, by us running these reports internally, we can also see if there's a potential exam or audit that isn't even been picked up by the IRS yet. And Catherine will point those out on some of the upcoming features that we've got coming out. So you may actually get, hey, just be advised, the IRS is starting to take a look at this one. Or you have a mismatched CP2000 over the past couple of years that could render a huge tax situation. So it's also proactive in what we're going to be offering to you.
Definitely. Anytime I've seen that something doesn't match up, I've said, hey, you're lucky the IRS hasn't caught this yet. You should take a look. Or, hey, coding just hit the account 15, 30 days ago. You should look and see if you can still amend or if you've got to wait.
Yeah, and Catherine, let me show this just for a second to put everything in context. So this is an example of the first page of a tax mentor report that Catherine sent off. It's not for this case, it's for another case. But if you think of this first page, somebody was just on the phone with Laura and she said, this tax help software report is a huge data dump. And it absolutely is. There isn't anything that we're not calculating that we can calculate because people use it in all different ways. What this is doing is paring down that data and then even taking the reports one step further and only including those sections that apply to your resolution. Okay. And this one actually wasn't a great example for it because they owe for so many years. It almost looks like a full report, but it has been highlighted and pointed out. But again, 90% of you, and this is what we get from people reaching out to Laura every day. This is what they want to know. how would you start this case? How would you get going? So I just wanted to put into context what she's going through is basically this, and then the summary and strategy is how we would get going on the case. So, and is this the slide you wanted, or did you want the next one?
Yes.
Okay.
So kind of harkening back to that PDF that Roger just showed you, this is from those sections of the PDF for this particular example. So, now we're going into some more details. So no, 2019 is missing, but I also bring out, listen, the transcripts were provided, so maybe it doesn't reflect that. Either way, there was no extension on file for 2019. I mean, this taxpayer is probably fine. They haven't been running up balances in recent years. No exam, no appeal, and then listing out each CSED individually. So instead of those 3 or 4 pages of CSEDs, in one little box, you've got all CSEDs listed. Just makes it easier than scrolling through every single page every time you want to look and figure out what the CSEDs are by tax period. All right.
Absolutely. And I'll share this with Catherine. When we automate this part of the process, Catherine, we're going to add the balance in here too. So they'll know what the balance is for each year. Now you can have multiple CSEDs per year, but remember, we're showing you this as a summary.
The latest.
Yep. And so it'll be the latest CSED. To see the details of the CSED, you got to go to the actual report. Remember, nothing with the IRS is simple.
No.
All right, there you go.
Okay. All right, so resolution collection dashboard. I mean, this taxpayer had problems stretching back into the 90s, but the years in question, final notice of intent to levy has been issued. So that's your final notice with CDP rights, and collections have been active on most of these since 2015. So this guy's been in collections for quite some time, and what you'll see is he's actually been under levy for quite some time. Go ahead.
There we go.
All right, so this is looking at the notices page. So CP90, CP91s are your intent to levy Social Security or intent to levy other federal benefits. You mostly see it in the context of Social Security levies because those are the most common federal benefit there are out there, but can also apply to income from Office Personnel Management, Department of Justice, Department of Defense, DFAS, which is Department Finance something. It's usually your military retirement accounts. So that is a levy that actually, or a notice that carries CDP rights. You can also see that the regular CDP notices were issued as well. All right.
Next one. There we go. What's up? And there might be a lag on your part. We notice Zoom has a slight lag.
So we're going to look for your first-time penalty abatement opportunities. And unfortunately, this client, they got none because of how long they were pyramiding tax debts. You had an over a decade period, and by now, just any FTA opportunities that were out there expired. Go ahead.
All right, next one. There you go.
All right. And so this particular taxpayer, if you look through, this report had, I think, about 5 pages of payment history on it. And you see these 509.59 levies. So that's consistent with a federal payment levy program levy, probably too high to be Social Security because Social Security is capped at 15% unless a manual levy is issued. So my guess is what the practitioner is saying, he thinks it's on the military pension is probably correct. And it's either OPM or DFAS, which means we now have a federal employee at play here. All right, next.
All right. There you go.
All right, and then looking at his income, we can see he's got gross distributions and then pensions and annuities. So he's got Social Security income, which is the pensions and annuities, and then the gross distributions are a 1099-R. Go ahead.
All right, next one.
All right, so it's kind of the last little bit of analysis. So collections, yes, he has been in collections for half a decade and he's been levied for most of that time. FTA opportunities, unfortunately not. The estimated IA for this particular tax period because of the short CSEDs would be 3,800, which means that's probably out of reach and we're looking at some kind of partial pay. collectability opinion is medium. Obviously, he's got the equity in the home, so that um, that's always tricky with a primary residence. And he's got moderate income. The reason he hasn't been accruing very much the last few years is because the majority of his Social Security income has not been taxable. But just because an income's not taxable doesn't mean it's not accessible for collections purposes. You know, $22,000 annually in Social Security, maybe he only pays taxes on 3,000 of it, but that full 22,000 is considered income on a 433F. Also going to, do a criminal evaluation for you, especially for those of you that, we're not licensed as attorneys. It's good for your E&O to have an idea of whether that's something you want to take on and or have a conversation with the taxpayer about. This particular taxpayer, I say it's a low criminal evaluation despite his balance. IRS has been content to let it be for quite some time, other than the automatic levy. And the recent compliance is very much in the taxpayer's favor. The fact that it's been since 2012 that he's had a balance due. All right.
All right, next one. There you go.
All right. And so then that's this flow chart taken, extrapolated out to more involved. So, collection status, we've got everything's in collections. The passport has been certified as seriously delinquent. The CP91 indicates possible Social Security levy or other FPLP levy, and we've got tax liens. I talk about the collectability. So still a decent amount of time left on the CSEDs. 4 is kind of in that 4 years is in that middle ground. Been under the monthly levy since late 2015. And what I also did is, the practitioner had given me the fair market value, and I said, well, I'm going to estimate what the quick sale value is, because that's what the IRS uses in their financial analysis. So it's got about $72,000 in quick sale value equity, with about $45,000 annual income. He's not rich, however, he's not probably not suffering. Joseph is asking me a question.
I was going to say,
Joseph is asking me a question. How can the IRS expect you to sell your house to resolve the tax debt? Where would the taxpayer live? That is a very complicated question. There are other ways to access equity besides selling it. For an elderly taxpayer, they may be asked to take a reverse mortgage. Seen that quite frequently. It may be, if we're in a more fraud situation, it applies. That's what there's no one right answer. It will depend on the picture as a whole. For this particular taxpayer, I don't think it's a huge risk, but in a collectability evaluation, equity does need to be considered. And then again, my criminal evaluation is that it's low. Balance due is over 100, but we're under 250, which is when an RO gets involved. And we've got compliance for the last 7-8 years, and that's very much in the taxpayer's favor.
Yeah, and just a note on that. During one of our presentations, a former RO or somebody had brought up the figure. I don't know how accurate this is, but I would imagine it's pretty close. They said the IRS takes less than 10 houses a year. I don't know how true that is.
That feels low, but if you consider that there's hundreds of thousands of collections cases open at any given time.
So yeah, and if anybody knows where that number is, I'd love to know it. But it tends to be what they end up doing is they end up levying and leaning everything if you refuse to sell it. And
Roger, I may have those numbers. Talk with me after this, and I'll see if I can find that out.
Okay.
I think it's low, but it is of a percentage of collections cases. It is low for primary residences to be taken. Not impossible. And I've certainly had a few cases over the year where not only was it going to happen, but quite frankly, the taxpayer deserved it. If that shocks you for me saying that, they had 1,000,001 chances and blew them all.
I would love to see
I'd
love to see the real case study examples of where the IRS actually took the house. Not just, hey, they took 27 houses this year, but who did they take them from? You know what I mean? It's
going to be your bad actors.
Yeah, absolutely.
Yeah. All right. So then we go into summary and strategy and steps. So all that information, so I've already condensed from the reports, and now I'm going to condense it even further from a tax resolution perspective. So, my assessment is that this candidate is probably not a good, or this taxpayer is not a good OIC candidate. And you've got the equity in the home as one factor. And you've also had him under levy at $510 per month approximately for 5 years. If they've been getting by without those funds, then this is now the first time they're doing something about it. Chances are they've got some ability to pay and therefore probably not a good OIC candidate. That may change. We are talking about an elderly taxpayer. He is retired. So if he develops health issues, needs those funds, maybe you have an effective tax administration basis for an OIC. My strategy and recommendation with the CSEDs in 4 years is he's probably going to be a partial pay. I don't see any way he's getting close up to that 3,800. That's the minimum IA. So get the taxpayer into a partial pay, which isn't going to toll your CSEDs, and see if you can get past the 2024 date. And then you've just got a small balance left on 2012. And then if the situation changes, they can always bring a new resolution proposal to the IRS. A lot of people kind of think it's a one and done deal, a lot of taxpayers particularly, but it's not. It's not a car payment. You're not locked into your resolution choice. If your situation changes, your situation changes. So my strategy and steps on this case are: 1, make sure that 2019 1040 is filed, please. 2, call Virginia and ask them, hey, what do we need to do here? What are our IA options? Virginia will normally go 24 months max in my experience. They do have an OIC program, but extremely difficult. If I don't know how many people have experiences with state OICs, IRS OICs are a walk in the park compared to state OICs, and they're not necessarily on the same terms. It'd be nice if states operated the same way as the IRS, but they really don't. So if you can get that IA set up first and then include it in the financial, that's probably usually going to be your best bet. All right, next one.
And yeah, let me kind of address that as well. A lot of THS users ask us, why don't we do state OICs? Funny thing is, if I offer a form, people a lot of times will make the assumption if it's filled out correctly, it'll be accepted. So
No.
In this case, people would fill out the Virginia OIC and then reach out to me and go, oh, something's wrong with the program. It didn't get accepted. Well, it's not like Catherine said, it's just because they have it doesn't mean they're going to authorize it. That's one reason we've been real apprehensive about offering resolution forms for the states. Now, the one advantage you get out of Tax Mentor that you're not getting with Tax Help Software is if you ask specific tax questions about a state, Catherine has experience in dealing with maybe not every state or maybe every state, but she's going to be able to lend that guidance, and that's something Tax Help Software, it just doesn't have access to the transcripts to give you that. So, and that came up from today. Somebody was like, when is Tax Help Software going to be able to do some of the state stuff? So just to kind of throw that out there. And then here you go. Next slide.
Yeah, and it really, and the states, they're kind of wild west. They're gonna do what they want, and there's value in you helping your clients. You're going to advocate for them. You're going to push the boundaries. It's really just keep pushing and pushing until you get to the final answer. Doesn't mean the final answer is something that anybody's going to be happy about. The states are aggressive. They want their money. I think the IRS is much kinder by comparison, and I've worked with a lot of states, and it's pretty universal across the 50 states, including the states that don't have income tax, where we're dealing with sales tax. So, all right, 1 second. It's just answering a question.
And if you want to answer some of these verbally instead of typing, I think they'll bode well for everybody. That was why I held off on those.
Yeah. So somebody was asking about the ratio of allowing state IAs. Good, very good pull out. It depends on whether we're dealing with a partial pay or a full pay. If there's a full pay, the IRS allows the state installment agreement in full. If it's a partial pay, there's actually a complicated calculation that ACS is supposed to use. They don't always catch it though. So I never bring it up when I'm submitting it. I'm asking for the full payment. There is an IRM section on it. I just do not have the IRM section off the top of my head. I'll try to find it later. Do I have experience with New Jersey? Honestly, not a ton. New Jersey is not one that came across my desk a lot. New York came across my desk a lot. Virginia did, because they're both large and aggressive. Now, New Jersey, when they're dealing with trust taxes, are extremely aggressive, but for individual taxes are probably middle of the line when you look across the whole spectrum of states. Yes, I am aware of the new Form 433H. I don't think it's more simplified than a 433F, in my opinion. It's quite frankly a combination of a 433F and the defunct 9465 form, where you're giving them the direct debit information and the financial all together so that they can make a decision between streamlined versus non-streamlined. To my mind, that form is more geared towards taxpayers. Tax professionals should be able to tell kind of from the beginning whether this is going to be a streamline that doesn't require any paperwork or something that requires a financial statement.
And I'll throw a couple things on there. So our good friend Mark Dabrowski, NAEA speaker, speaks to tax a lot. He posted on Facebook the other day that he actually, the first person he talked to at the IRS mentioned the 433H, and they actually called it the 433I. And he had to say, "You mean the 433H?" And they said, "Yeah, it's whatever the new one is." And it was more a function of they were discussing it, not requiring it. So I don't know anybody that's been required to submit it or asked to submit it, and I haven't seen anything on Facebook. So if anybody's got any real life experience, please share it with us. And I'll throw something else out there on one of the previous questions Catherine had. I've been to a couple classes, and one of the strategies when you're applying for a partial pay or an offer is, if you get into a state agreement, is to run the state agreement up higher than the minimum payment to do a full pay. So in other words, if a minimum, a full pay with the state, you could have got it for $300. There's been discussion sometimes to do it for $1,000 a month in the short term and report it that way. And then, once you get your agreement, then take it back down to the minimum. That's what the IRS is looking for when they try to justify the ratios. So just kind of throwing it out there. They don't always catch it. Not recommending you do it. I think it's kind of out there in the gray area, but this isn't an ethics class. This is a tax practice question. So I just thought I would throw that out there. There are people putting that out on the street as a strategy. So
yes, I agree. It's in the gray area. So, and then just to wrap this particular case study up, next step is prepare the form 433F, review with the taxpayer. So one possibility is that 433F is going to show a higher monthly disposable income than the 509, 510 he's already been paying a month. Taxpayer has the following options: do nothing. Used to call it rolling the dice. See if the IRS decides to do anything else or is happy taking that 509 for the remainder of the CSEDs. They could leave him alone. They could not leave him alone, and there's also the chance the levy might survive past the CSEDs if it was on Social Security, or take the safe route, which is enter into a formal agreement and make those payments until the CSEDs expire. And then the last step 3, step 4 really, is because this particular taxpayer is receiving income either from OPM or DFAS, you can't just call into anybody at the automated collection system. You have to request to speak with a FERDI employee. FERDI representatives have additional training above and beyond the regular ACS collection representatives. And so unfortunately, they provide phone numbers and extensions in the IRM. I've never actually had those work. I just have to call in and say, hey, I've got a FERDI taxpayer. I need to be transferred over. Sometimes they'll just do it right away, but a lot of times they'll still put you through disclosure authorization to find out before they transfer you. All right.
And that was our last slide. And what I wanted to show everybody, people are asking how they can send current cases in. So for current THS users, you actually have this built in. We're doing them at no cost through the end of the year, probably the first week of January, somewhere in there. And let me go ahead, and we had recorded this previously, so I apologize. It's kind of an image. It's hard to see on here, but I'll tell you where it's at because there's some other information that's on here. So until the Tax Mentor website is up, we have the taxhelpsoftware.com/TMG as a landing page. Okay. And on there is the introducing the customized reports. At about the 9.5 minute mark, 9:45, we actually show you how to get the report. And it should start clearing up in a minute. Maybe not. Yeah, there you go. YouTube will start to catch up. But what it is this button right here that says upload transcript to TMG. It's in your Iris account screen in THS. This is what you do. You just fill out who you are, your email, and any additional information. And one thing I'll point out, if you're concerned about the resolution affecting, hey, my client travels a lot, their passport is restricted. So my goal is to get that lifted as soon as possible. Let Catherine know that. She can guide and dictate, because the resolution of I want to get the passport released fast is different than, hey, their passport's been revoked and I don't care if it's revoked. Okay. So those are the kind of examples that you're going to put in this box down here. And we're going to upgrade this form to ask more questions. So we already know that we're going to start asking about tax or state tax and those kind of things. And so look for some improvements on here. So we're going to ask you the questions you might not have thought about to help us do a better job. One other thing I wanted to make you aware of, because we redact the addresses in the transcript, we can't look up the Zillow values. So if you would pass along to us what the Zillow value is of a house that the client owes, we can work that into our collectability score to you. We will see on the wage and income report if they have a mortgage and how much is left on it. Okay. But yeah, just to submit this, once you click on upload transcripts to TMG, you fill this form out, and then you hit the upload button, and it sends us the transcripts, but in a way that all the personal information is done. Even though the IRS redacts most transcripts to only the last 4 of the social, we change the last 4 of the social. So there's nothing to tie this back to your client. So when we're presenting these case consults, we can actually show you the transcripts, and they're immediately available to us for that. So again, you can go to Tax Help Software, and I'll copy that website and put it in the chat box down here and bring it over. And again, I expect our website to be up in the next, definitely before Christmas. And the question is how much functionality. So I just sent that out to all attendees. So I will put this class on this page and also on the THS best practices page, which is this one. And there we go. And all right, let me pull this off. And Catherine, anything to add? You want me to open the next presentation
Nope,
up?
that's it.
All right. And if you want to check the question pane while I'm doing that.
I've answered a few. Jennifer has a question about, is there a place to fill out a 433A? I'm assuming in THS. Roger, I'll let you take that question.
Yep. So the answer is yes. On that same taxpayer account screen, it's just above the TMG. I think it's the top button in that group, and it's the IRS forms. And there's a list of the forms that we have in there. And
Joseph asked, how does filing a bankruptcy affect the levy or lien process? My disclaimer is I am not a bankruptcy attorney. I do not practice bankruptcy law. Any specific bankruptcy questions should be directed to an attorney specializing in bankruptcy. However, the filing of bankruptcy will halt most actions. There is room for IRS counsel once appointed to petition the trustee for possibly some levy actions to continue, especially if they think it was an attempt to evade collections. So, but in generally most instances, bankruptcy kind of stops everything. That's why the CSED's tool, because they're not allowed to do anything.
And in reference to the liens will help define if it's a secured debt or a non-secured debt. So that affects the dischargeability of that specific debt. Liens, for the most part, in a bankruptcy are bad. However, I met with a high-end bankruptcy attorney that said that is a false blanket statement to say liens in a bankruptcy are bad. He said sometimes a client is able to keep their house because the IRS has liens on it, or some other examples out there. So there is a strategy for some of the high-end bankruptcy people that liens can protect an asset through the bankruptcy, if that helps. So somebody's asking, so people are asking, can they upload 433s to us? Let me answer that one live, because this is the challenge with 433s, and we've already had a couple uploaded to us. I think the avenue for us to look at 433s would be in the in this format. So if somebody had a question about a 433, and we're not going to go too deep into how to do 433s because there's so many other great resources out there that already exist. I'm not trying to recreate, good material that's out there, but like we've had a couple of people send us 433s and say, what do you think about this one? Well, I don't know. It's like taking a picture of a car and going, how fast do you think this car is? And the answer is, until I know what's under the hood and take it for a drive, I don't know. A 433, all I can tell you is, are all the boxes checked? And that's not the purpose of what Tax Mentor is out there for. In order for us to evaluate a 433, we would have to see all the raw data and basically redo the 433. So I think the more specific question is, if you have a question on a 433, maybe take a screenshot of that part of the 433 and do it as a follow-up to a case that we're already looking at. And we are working on being able to add other attachments to the upload. That's some of the things that we're working on with the new website. It's just, we've talked about it internally, and what's expected of us when we look at a 433, there's not much we can guide you on without actually looking at the contents. Now, part of that is we are going to have some 433 case study training, and where we kind of run you through maybe our thoughts on doing a 433, but it's not going to be the focus of what we do. It's my goal is to not train people how to do the 433. Now, if you need examples of some training classes on the best ones to do it, reach out to us. We've got these other partnerships with other people that do a wonderful job that go through the 433s and how to create them. Catherine, did you answer the North Carolina question? Do you have experience with North Carolina so I can take it off our list?
I said Laura have experience with North Carolina. Oh, is that me?
Oh, I'm sorry. Yeah, and this is Catherine, not Laura. Laura's on the tax help software side.
I have experience with most states, some more than others, obviously the more populous states. North Carolina actually falls on the more lenient side of the spectrum. Probably Louisiana, Alabama, Wisconsin are on the more harsh side. So North Carolina falls towards the lower end of the harshness. They will generally allow up to 72 months. Used to be 60 months. They updated it a little while ago to do 72 months. So they're kind of following the IRS's streamline example there. But again, very rarely do you get to do hardship-based or partial pays with any states, even North Carolina.
Yep. And one quick comment on the twice monthly classes. We will have our CE and CPE credits, it looks like, towards the end of the year. There will be an opportunity for us to do on some of these based on the materials we're presenting on the consultations. We don't think we can do credit. We've kind of looked at the requirements just for a general Q&A session. You generally, that's not what this is there for, but we do have some structured things that we'll be going over that we can actually title up and submit as a class in advance. So some of these, or a portion of these, will have polling questions to where you will get credits to apply for your training. Not all of them, and not all of each meeting, but we are working on those kind of things. So just something to point out to everybody there. It's, if we find the ability to give credit and it's not the gray area, we'll definitely offer the credit for some of these.
All right. Moving on.
New slides up.
All right, so this one came in actually just Monday. This one, the tags on it are RO, OIC, ES, and also AUR. So there was actually, this one was pretty, kind of checked a lot of boxes, which is why I picked it for an example for today. So moving on.
Oops, and
I have to fire you, Roger.
I was trying to give you control, but I've looked at Zoom and where the button is supposed to be to share is not on here. So it must have been in the settings.
No, that's it. We're canceling Zoom. So there wasn't much in the intake notes. This is not a position any practitioner likes being in, is when a client submitted their own OIC and they were denied, and now I'm seeking a professional. Well, that client probably lost some money in that OIC and they should have just come to you the first time around, but live and learn, right? All right, moving on.
Okay, next slide's up.
Okay, oh, look at this one. Okay, so one, they're in tax filing compliance, but they have not made any ES in 2020. And they are well over the 250 mark. So this would either have to be with the revenue officer or it would have to be an OIC. And this particular taxpayer is an example of pyramiding tax liabilities. They are just going for broke. It's getting a little better, but this is not a good situation given their balance and the history of balances.
And I'll throw this out there. And we're still training Catherine on some of the new features of THS that she didn't have. They had kind of their own version of THS since they were the first ones. But the pound signs under examination indicate that both these years are under CP 2000.
Mm-hmm.
So, and I wasn't sure if she was aware of that yet, but so you got the two CP 2000s that are still pending. And I looked at the 17 and I thought, boy, that's a little old to be doing a CP 2000 on. And then I realized,
COVID.
Yep. And it's COVID. And remember, if it's under 25% under reporter, they have 6 years to come after you on a CP 2000.
And this particular practitioner did not upload wage and income transcripts, so I wasn't really able to get a feel for what the underreporting might be. But yes, they have been flagged for underreporting on those 2 periods by those dates.
And just to let you know, the transcript should come up to us automatically. So if that person had wage and income, it would have come up to us. It's not, you don't select, we get everything. So definitely make sure you're pulling the wage and incomes because there's a lot of good.
There's a lot of very valuable information there for us. Absolutely. So again, review of underreported income 2020. So this year, and yeah, the February one probably got held up a bit because of COVID, but I mean, it's not unheard of for it to take longer. And honestly, it may even be a sign of somebody possibly getting ready to refer it to the field because of their history. You never know. It's just a guess. Shelly, how do you get the RO info from PPS? They act like it's a secret most days. I need an RO. I have a client with a huge balance. So if your account has been placed in the queue, which you'll need to call ACS to request that, PPL cannot put the PPL or PPS, whichever you prefer, cannot put the account in the queue, only collections can. Now, it may be that when you call, they're still in the queue, haven't been assigned to a group office, but once they're assigned, I have never had a problem with them providing, it's not necessarily the RO contact information, it's the group office contact information, but since secretaries at the group offices have been going the way of the dodo, the number they give you is usually the group manager's number, and they get back to you really quick. They're like, yeah, it's assigned to this person, this office, here's their phone number, here's their fax number, and then you're off to the races. So I hope that answered your question, Shelley.
Yep. And yes, sometimes they do act like it's a big secret. Sometimes they don't know the answer to the question is the funny part. So.
They may not know where to look, which I guess that's a scary thought, but it's very possible given how many new people have come into the IRS. So they were in a huge hiring spree heading into COVID, and they kept hiring during COVID. So it's a lot of new people in a lot of different places. Taxpayer Advocate had released, I think it was the Advocate, released the stresses that have been put on PPL this year, and it's been quite daunting.
And some people told me that the retirements accelerated too. Once they started requiring some people to start coming back to the office, some people went ahead and opted to take the retirement. I don't know how true, just kind of something I picked up in one of the many meetings we have with IRS, and it was kind of an off the record kind of thing, but there were people that were maybe planning on retiring next year or the year after that went ahead and called it a day a little bit early. So, but the IRS has said on several instances that they are in a hiring boom right now.
They are. They've really got big goals for next year to step up enforcement.
They have to.
they do have to. They were already behind, and they've got to catch up. All right. So looking at the CSED, so you can see the tolling that's from the offer and compromise. We've got 8 and 10 years, so we're definitely not going to have any CSED strategy with this particular taxpayer. Next slide just shows more of the same. When I looked at the tolling events, again, nothing that stood out.
Especially since we knew they had an offer.
Yeah.
So we had confirmed that an offer existed, which, there's not a lot of opportunity once we've confirmed that the tolling event is real.
Correct. So compliance, yes, filing compliance. Audits. Yes, 18 and 17 have both been, I call it flagged by AUR. There's no guarantee that anything will happen with it, but the referral has been sent. Appeals, no. And no CSED strategy. All the CSEDs are 7 to 10 years away, and that's because of the almost 500 days that got told due to that OIC.
And
They probably should
let me,
never have filed.
I was going to say, let me throw in, yeah, they definitely did more years than I think most of us would have, but the on the CSETs, so those in the CSET class that we do, and we're going to do it the other one in the spring. It was a whole 1 week seminar. One of the things we learned is what the official stat, it kind of eludes me a little bit, but I want to say something 20% of tolling events are not properly documented in the system. So we're not going to tell you to contest a tolling event that we pretty much looks like it happened, but those that were in the CSET class, I taught you guys how if it made a big enough difference, this one's still 10 years out, but just remember, just because there is a tolling event doesn't mean the IRS properly documented it. And that's one of the things we teach in that CSET class or that seminar. So, and did you want the next slide, or is this the
Yes,
one we're on?
please.
Okay,
Nope, that's it.
there we go.
All right, so compliance, yes, but I had my little disclaimer. No ES taxes present on 2020 AT. They are not there. And 2020 is almost over. So they've missed 3 quarters with 1 quarter due in a month and a half. Active audit, yes, 18 and 17 have been flagged. Appeals deadlines, there were none. The CDP notices were issued on a majority of these balances before they filed the OIC. And then there's all of our CSEDs. So they stretch from the majority
Wow,
are, yeah,
that's a lot.
it is. And it's all the way back to 2010. So we've got a decade of pyramiding tax
And
steps.
and the funny thing is, these are the ones where the customer comes to you, no estimated payments, and they're basically like, "Yeah, I really want an offer." And looking at them and all this person is not all of a sudden going to become a compliant taxpayer over the 5-year period. Just throwing that out there. Not everybody should be looked at for an offer. I mean, yes, evaluate them for an offer, but there are so many red flags on this person as an offer candidate. You might get it for them, but the chances of them completing are very low, in my opinion.
Right. So just coming over to a couple of these questions. Will the reports in THS go away at the end of the year unless we purchase Tax Mentor? Absolutely not. These are separate services. Tax Mentor is complementary. It is, but it's designed to assist in the tax resolution space. So not all of your clients are tax resolution clients, but THS still has value from a tax preparation perspective. This is getting you that next step of taking all of that data and turning it into an assessment of their tax resolution possibilities. What can cause tolling events besides filing amended returns? Collection due process hearing will do that. OICs will do that. Pending installment agreements, there's a lot of different things in there. Bankruptcy will do that. And Roger, help me out. What else?
Oh, I always refer everybody to the archive presentations because it's that's not a question you want to answer this quick. And if you Google IRS IRM tolling events, they're all listed right there in the IRM. Just Google IRS IRM tolling events or CSEDs. It'll come up, show you what they are. That's one of those you don't want to just peel off an answer. And again, is it tolling events for ASED, RSED, CSEDs? There's 3 statute dates. So that one I refer to the other presentation because it's a loaded question. So, but you covered most of them.
Right. If the OIC pre-qualifier says no for debt of 125, would you still offer? The only reason you should ignore the OIC pre-qualifier is if you think you have some sort of effective tax administration or special circumstances basis. That's a case-by-case decision. Look at the IRM and the examples provided there for some more information. But if on a pure doubtist collectability, unless you need to double check your numbers, if the OIC calculator is saying no, then the answer is 99.9% likely to be no to an offer.
And I'll throw this out there for that. The way Catherine would know how to answer the questions, it's the pre-qualifier doesn't massage the information. Those that have been to, the boot camp with ASTPS, there's nothing wrong with a best practice and, knowing what is allowed technically. And, there's some best practices. Don't call them tricks. We call them best practices. So I have seen people that have gotten offers accepted, but then I go back to the information that was put into the pre-qualifier technically wasn't probably the same that was input on the 433. So now one advantage THS gives, if you do the 433 in THS and it doesn't look like an offer, you just flip the same data and you can flip it to a PPIA. So you're not double entering the data. So I'll throw that out there. I tell everybody, if you're just getting started, always start with the 433 AOIC in the software, because it's the one that answers the most questions and will transfer to all the other forms. So, do it, take a look. But at the end of the day, it does ask more questions, but if you're getting new at this, consider it a little bit of practice. So, that'll get you going with that. But yeah, absolutely. The pre-qualifier, if answered correctly, should be. The other big complaint we get is my offer was turned down because my monthly compensation was more than the full pay. If your monthly, it's the wordings, the monthly disposable income is higher than the full pay amount, you're going to have a hard time getting the offer accepted. So
Minus ATA, effective tax administration.
yeah. So yeah, exactly. And effective tax administration is the different bucket. And last time I went out there and said, I was talking to somebody, a good friend of mine out of Kansas City, Missouri. I said, man, nobody ever gets those. I know some people do. He goes, don't tell anybody, but I got two.
They do
So,
happen.
yep, people do get them, but I so many people get rejected on them, if that makes sense.
What if we need a lot more than 24 a year? Message me or Roger individually and we'll chat about what your needs are. We are absolutely looking at possibly a more enterprise level product. So, you tell us what your needs are and we'll tell you if that's something we can do.
And touching on that, so right now I'm rebuilding the tax help software transcript downloader. Sometime early next year, I'm hoping for a January release, but this thing is going to be so much more user friendly than the one that's kind of evolved over the past decade. It's with an IRS API. So we're hoping that it's going to be literally over 1,000 transcripts an hour is what we're hoping for. Testing starts next week on that. I'm real excited about that, but it's going to allow a lot of different things. But once that project is done for tax help software, and this goes to answer Abraham's question as well, what I'm going to do is automate Catherine's workflow even more than it is now. Like those CSEDs, there's no reason for her to cut and paste those out of the report. I'm going to bring those over into here. We also have some plain English technology that we've started to work on for some of the larger tax resolution or the tax companies, not tax resolution companies, but tax companies. Think along the lines of our EZ report that are now in plain English that you can give to your taxpayer and you can customize them with your logo. That's kind of where we're heading a little bit. So Abraham's asking, is THS and Tax Mentor two different companies? The answer is yes. Tax Mentor has spun out of Tax Help Software. It's basically going to now run all of our education. Last year, I want to say something like 25 or 30% of our revenue came from education. And it really needs to be in its own thing. The other thing that we wanted to do by doing the consultations was Tax Mentor has E&O insurance, whereas Tax Help Software has software E&O, but not tax E&O. It's a different thing. So Tax Mentor is not a software company. It's not a technology company. It's definitely in the tax consulting field. They are two different companies offering two different products. Now, that being said, there's a synergy between the two, and you're going to see a lot of integration between the two products. Okay.
Tax Mentor will be able to work with more than just THS users.
Yes. And what we're looking at is basically for Catherine to open up a case and it already be uploaded into our CRM. And, Catherine has this pre-formatted report and she doesn't have to copy and paste. It's literally, she's just putting her brain to the answer. And when you knock down all the peripheral stuff of looking at transcripts, running the report, putting this stuff and uploading them, once we take those off her back, right now we think our capacity is over 1,000 a month, and we haven't even brought my dad on board as a contractor to help with these. Okay, so the capacity for consultations is going to be in the thousands per month, and the way we're doing it is it's going to be top level folks, and Catherine's going to have a team, but they're going to know exactly what we're looking for in each scenario. And it's the place the technology is going is, think about it as a tax help software report, but with a human brain upgrading it. It's all the things you can't program, but we are going to use the programming to streamline that.
We're going to
So
program as much as possible.
yeah. So,
Yeah.
if you've ever seen one of those movies like Tron, I just kind of want to plug THS into Catherine's brain and make it output stuff. So that's our overriding goal, whatever that movie was where they did the sensors in the brain. And then somebody had the question about, Roger, is there any capability in THS for mock practice cases? Example, in Drake, they have some practice returns that you can load. On our best practices page, we do have 2 resolution cases that you can download and kind of run into the program. Fred is working on the ability for you to import like test transcripts, because we're going to have a whole library of test transcripts through Tax Mentor. And that would be an example of one of the migrations. You may want to take a Tax Mentor case, import the transcripts into your tax help software, and basically work the case in the 433s. We're also working on a program that will create pay stubs and expenses based on last year's tax return for that taxpayer and their wage and income. We actually want to generate enough stuff for you to create stuff. That's going to be next year project, but that's one of the projects that we are working on. And Catherine's kind of seen the demo of some of the work we've already done on that. It's going to generate driver's licenses. It's going to generate social security cards. The goal on those cases is for you to actually simulate having a large stack of receipts, and you're going to create a 433. One knock I've got on the people that teach 433s, and it's everybody across the board. You generally get all the information on 1 or 2 pages, and all you're doing is transferring that information from those 2 summarized pages into the 433. I find that when you're training your staff, you kind of need to train them how they're really going to do it, and missing data, what to look for, and train them how they're going to work. And I used to be a deputy sheriff years ago, and it was one thing to go to a shooting range and stand at 5 yards and shoot the target out, but there aren't that many shooting outs you're going to get in at 5 yards where you're standing perfectly flat against the target, arms extended. And we transferred into running through the Hogan Alley things where you're jumping on the ground behind cars and shooting under cars and over trucks. That's what I'm trying to simulate, that real world experience, except in tax. So I'm trying to make taxes sound more exciting than they probably are. But and it says, will THS users only be able to download those samples? In January, we're going to open up the Tax Mentor group to other than tax help software users. Right now, we're doing the integration with THS because obviously that's where we have a software platform to do it. There will be a standalone Tax Mentor program. So quite frankly, if you use Pitbull or Canopy and you want to exercise these services, you'll pay a little bit more for not being a THS user. Okay. However, you will be able to upload transcripts. You'd be able to download those transcripts, but what Pitbull and Canopy do with those, those sample transcripts, that I won't be able to help with. But you would be able to still work a case and probably enter some manually through the system if you wanted to test yourself. And I agree. I always use the example that we need more scenarios like Drake. To teach software, you can't do a user manual. I mean, we do, and Drake has one, but truly you learn by doing. And that's something that Tax Mentor is actually going to do some case studies for tax help software. So when I said we're not doing 433s for Tax Mentor, that's true. But for THS users, Roger and Catherine are probably going to do some 433s in tax help software for tax help software users, if that makes sense. So, right. And let me see here. Drake is the best tax software. It's who we use. Let's see. If we don't join TMG, can we download samples? Oh, to answer your question, to download the samples, you'll have to be a member of TMG. That'll be a access to the library, and the transcripts will be proprietary, for members that are out there. And practice management. THS has a basic CRM built into it, but it's by no means good enough to run a large resolution firm. What it's done, I basically created something that can work side by side with Drake for you to put resolution notes. If you're a tax person that also does some resolution, it's got the capabilities to do that and track your cases. A true CRM would be full-time programming for Fred and I. So we're staying in what we know how to do.
And
We did
significantly more expensive.
Yes. And yeah, the CRM itself would cost a lot more than what we do. And we'd have to have a team. We are talking to a couple people out there that have platforms, and I can tell you it's not Pipple and it's not Canopy. We had those conversations with them in the past. Didn't go well. They basically decided to do what we do and that kind of thing. So we get real apprehensive about partnerships with software. Apparently we made this look really easy to do and everybody thinks that they can do it. So there are some online opportunities that we're looking at to migrate the software to. I'll leave it at that. So,
all right, next screen.
All right. Oh, I didn't realize we were only halfway through, and sorry about that. We got off on the CSEDs.
Yep. All right. So I took just 1 year here, but as an example to show, I mean, basically everything's already happened on this case. The collection due process notice of intent to levy was issued, lien placed on assets. They sent in an offer, and then it was denied. Shocker. You'll see as we get to their tax return income information. So,
Let me throw this one little nugget out. So we meet with IRS on the online taxpayer portal, the new, the e-signatures and all that. There's going to be more information coming down on all that. One of the projects that the IRS has on their future state plan is they want to do the financials online through the Get Transcript app. Currently, there's no budget to have the tax pro be able to do their financials. They had originally talked about it wouldn't be the 433, it would be a different format of the financials. But I can tell you future state of the IRS is they're trying to make it more user friendly. Kind of think of the online payment agreement, which never works right. It does occasionally, but they're looking at building that except for a 433. And that has been discussed and it hasn't been budgeted. So that is one of the things that they're looking at doing. So go ahead, back to you. I just thought I'd mention that there is some interest at the IRS to build an online financial, but it's would be customer facing to the taxpayer.
All right. No first time abatement opportunity with this particular taxpayer. Now there's a question mark for 2008. 2008 possibly, if 7, 6, and 5 meet criteria. However, 6 and 5 transcripts were not shown. To be honest, either way, you've probably got an expired RSED. So, there you go. Okay, next page.
All right.
Okay. So we didn't have wage and income transcripts, which I would have liked, but we did have tax return transcripts. So you can see you've got massive wages and salaries plus income other than wages, salaries, and tips. And that income is coming from a K1 and what looks to be an S corporation. Probably about the only positive I can see here is that they are paying themselves a reasonable wage and they are paying some of their taxes through that W-2, but they're not paying enough. And they are consistently year after year failing to make estimated tax payments. So you've got gross income just shy of 300,000. Is anybody else shocked that they did not qualify for an offer? Because I'm not. I also see total itemized deductions of $40,000. Now, it's not entirely specific what that is, but chances are a good chunk of that is mortgage interest, which is probably looking at a larger house, and there's probably some equity there. So you've got a double doozy of 6-figure income. And to my mind, what reads as it's very likely that they have equity in property. So that's a death knell probably for an offer. Next.
So I was mesmerized. I was looking at some of those numbers thinking definitely not an offer candidate. Not saying that somebody wouldn't be able to get, Bob McKenzie would try.
There are always
some magic.
Exceptions.
Yes.
Yep. All right, so collections, 100%. They might be kind of in that middle ground after the offer and COVID, but that's where they're headed if they're not already there. FTA opportunity, Yet. Estimated IA, NA, their balance is over 250,000. Therefore, they do not qualify for the same installment agreement options you would have at the call center level with ACS. They have to, if we're looking at an IA, they have to go to a group office, they have to be assigned to an RO, and an RO is going to make a collection determination decision from a 433A. So, I mean, I can estimate what the full pay is, but that's not necessarily what's going to happen.
And with them pyramiding, we've had people
Yeah.
reach out. The two death knells on what people think are easy cases are they failed out of an installment agreement before, and that they pyramid their debt. It seems like those two things tend to make what you think would be an easy full pay case into a I just did an engagement letter for an easy full pay and it's not. And now I'm not making enough money on this.
Pyramiding liabilities is one of the hardest things to stop. It's so hard to get your taxpayer, your client turned around, get them on the wagon of paying their current taxes. But it is so vital, especially as you get up into these higher balance dues. You may be able to get away with it at ACS, but they're also going to keep defaulting year after year, even as you put them into agreements. But once you hit that 250 threshold, then the revenue officers become involved, or maybe even settlement officers if you choose to appeal. And they are not forgiving of what to their mind is blatant disregard of your tax obligations. Abraham had a question on
Yeah, I'll answer.
FTA. Okay.
I'll answer that one. Anybody with FTA questions, definitely directing you to our 1 hour FTA class because it can get complicated, especially on older FTAs. You can get an FTA back to 2001. You need to pull transcripts back to 98 because you can't evaluate 01 unless you look at 98. Secondly, there are some exceptions to where if there's an existing tax debt and you have an old FTA, in some instances, the IRS will offset the FTA amount against existing debt when the RSET is expired. There is nothing in the IRM that supports or backs up that policy. We think it's an error on the reasonable cause assister. But I have seen numerous examples where people have gotten balances transferred from, say, a 2003 FTA where there is no RSED that offset current debt. So, but there's, if the IRS doesn't give it to you, it's not in the IRM. People are always reaching out for that IRM site, and there isn't one. I think the IRM says exactly the opposite. So in that case, I'm telling you, how the IRS practices versus what the IRM actually says. So.
Right. Yep. And so, with this taxpayer, criminal evaluation here, it's at medium. They are not so blatant that I think it's an immediate shoo-in that they would be referred to CI or criminal investigation. Quite frankly, the IRS wants their money more than they want to put people in jail. But these taxpayers, if they don't fix this behavior, and given that they're pulling in high six-figure income, the IRS would not be sad about making an example of them if they don't get it under control.
And Catherine, let me ask this question on this kind of case. Is this the kind of case that looks like one where all of a sudden there's a tax fraud referral because of the income levels and them doing that extra step to hide what they're doing? So in other words,
no, it wouldn't be an immediate referral. It would depend on kind of the vibe the revenue officer gets from them. That if the revenue officers are trained to look for badges of fraud. Just owing in and of itself is not a badge of fraud, but once the revenue officer knocks on your door or tells you through your power of attorney that you have to make your estimated tax payments, and if you then blatantly decide not to, that's when you could start being considered fraudulent. The fact that they've already gone through the OIC program may not be in their favor in that instance, but most revenue officers they're there to collect. And if they can see a way to collect and get the client on track, then that's what they're going to do. But it's a slippery slope when a taxpayer reaches this point.
Hey, and let me
another 10, another 30, another 100.
So
where does it cross the line?
What do you think? This goes to the whole circular 230, but I'm going to ask it. This is a closed group. If you hung your shingle tomorrow and this case came in, what would you charge for this case? if we're sitting at the lunch table and I said, wow, what would you
Mm-hmm.
charge for this case? Help me out. And I know price setting and all that, but I'm curious.
Yeah. Um, resolution only, not to do another OIC. I would shoot for between 7 to 10. And I'd want more on the 10 side. I'd kind of want to charge them. I'm trying to think the best way to put this, but on paper, this looks like a taxpayer with very poor expectations, which means they're going to cost me time in telling them how it is and educating them and keeping them on track. So I'd want to push towards the higher 10 because I feel like they're going to create extra work for me, given their history, their failed OIC, and their ongoing lack of compliance.
I gotcha. And that's one of the things we're looking at. You have Circular 230 and it's kind of talks about pricing and all this. And there's price tools out there that basically say you plug a case in, it gives you pricing. We're looking at Circular 230 to figure out how we can somehow communicate expectations on pricing without being a violation of Circular 230, if that's the best way.
And this is a hypothetical. They're not my client. I'm not in practice, but one of the things you charge for is time, and this taxpayer is going to take. They're going to take some time from you. They're going to take time in just educating them. They're going to take time in um, uh, aligning their expectations and explaining how it works. And they're going to, if they've got the income and assets that it looks like they do, it's going to take time in negotiations with the IRS. And revenue officers do not work their cases quickly. So that's it's your pay. They got to pay you for your time.
Well, and I'll throw this out
point.
there. Part of being profitable in resolution is maintaining your inventory. If you're somebody new getting started, this case may cost you more in lost opportunities, the opportunity cost. This may be a case that you pass on if you're just getting into this. And, we've laid out what you need to do, but again, this is going to get complicated and suck more and more of your time. Would you rather have $3,000-$4,000 cases or one $10,000 case?
Right.
Be good at what you do.
Yeah, and in cases like this, it kind of ebbs and flows. You'll have periods of inactivity, and then all of a sudden things come together really quick, where you're having to dump a lot of time in a small short period to get the case going again. So that's again part of why I would charge so high for this case if I was in private practice.
And what's funny is what you're saying is high. There's people over there going 10,000. This is a $25,000 case, and I not to get into a thing about fees, folks, because I've seen all
these
the
taxpayers
videos.
could charge. I'm sure they could afford 25,000, but is it worth 25,000?
Yeah, and again, we're not setting prices for anybody. I know there's people out there that would charge 25 grand for this case based on conversations I've had. So it's the wide ranging spectrum, and then you got to fall into the not abusive, and that we all have to define for ourselves. So it's
morally unconscionable fee. That's the Circular 230 term.
Absolutely. So do you want next slide?
Yes, please.
All right. All right, there you go.
All right, so first time abatement. Nope, none that we can see. There's that slim possibility on 2008. I don't know that it's even if it's there, it doesn't make a big difference. So collections, yes, the final notices have been issued on everything up through 16. Tax liens have been filed. Their passport has been certified as seriously delinquent. There was even a withholding compliance letter that was mailed to the taxpayer, probably to themselves as their own employer back in 2018. But unfortunately, it's not. I think it helped some, but it's not doing the trick because it's not covering the tax liability from the K1s. And then again, OIC denied. So they're either already back in collections, they're on their way back to collections. If an appeal was filed, it would be different, but I don't see that happening. Again, no way to estimate an IA because of where they are balance due. Collectability opinion, high. They've got six-figure income and just their W-2 wages alone. Their K1s have been usually six figures. There's the corporation is a source of income and it's also an asset. And I think a large mortgage interest deduction does indicate a home with possible equity. And it probably also indicates that they're above collection information standards. I would bet money that if I saw this taxpayer's 433A, they're well above the standards for their area. I think it would be a safe bet. And then criminal evaluation, medium, they've got to get the pyramiding under control. They have to stop. It cannot go on, or eventually they will get themselves to a point of no return. I used to have a kind of an expression I'd share with people that I was training in my last life. I call it the fool me once, shame on you, fool me twice, shame on me rule of the IRS. IRS usually gives you a pass once, maybe twice. All right, they'll give you the benefit of the doubt. They'll let you try to work it out with collections. The more times you kind of thumb your nose up at them, the less likely they are to give you that pass, because they're not going to say fool me twice, shame on me. They're going to say, no, you tried to fool me twice, shame on you, and we're going to take you to the cleaners for it. That's just my assessment of how the collections department works, because again, remember, their goal is to collect the money first and foremost. They don't want to take people's houses. It's kind of a pain in the butt to do. It really only comes around when you kind of keep throwing things back in their face. Joseph asked a question: if OIC denied, does the IRS keep the cash? How can you deny avoid this? Yes, you do the lump sum or even the periodic payments, your payments made are non-refundable. You can allocate where you want those applied to. So you can apply those to your client's best interest if you want. Your only way to really avoid having a lot of money invested is to do a 24-month periodic payment and then structure your 24 monthly payments with low payments for 23 months and a balloon payment at 24 months of the rest of the offer amount. There is a provision for it in the IRM. 24-month periodic payments do not require 24 equal monthly payments. You still have to put something in. Minimum's $25 per month. That's the least amount the system can accept. So that's usually your best bet if you're trying to avoid putting a lot of money into the offer.
And then I think if I've been to a lot of Bob McKenzie classes, for those of you that know Bob, and I want to say Bob always pitches this, or I want to say he's the one I remember talking about this, but I think if I remember, and Catherine, you help me out on this one, I think he converts people to the 5-month if it's accepted, if that makes sense.
Yeah, you can, if the OIC examiner is amenable to it, but usually they would be.
Okay. And just to kind of throw that out there, because I know a lot of people here attend the same classes I do, so I throw that out there. So
for Tax Mentor, what is the anticipated turnaround time for case consultations? We're saying 48 to 72 hours. Lately, I've been getting them around in 24 hours because they haven't been coming in a deluge, but I suspect after today's webinar, I'll have quite a few waiting for me. You'll have it no less than 3 days. The soonest I can get it to you is I will get it to you.
And for those out there, so we've already talked to Bill Nemeth, my father. He's definitely interested in doing some of these as well. So we have the ability to run the capacity up. Laura's obviously here, but we want to keep Laura over at Tax Help Software, running the day-to-day operations, and she does a wonderful job with that. And eventually we're going to look at hiring a couple of enrolled agents. And I got to be honest, after we've talked, we've had a few people reach out that actually said they're getting ready to retire and they're looking for something just to kind of keep going. So the question for us is, do we hire newer enrolled agents and teach them, or go with people with years of experience that just want to not work cases anymore, but just kind of do the fun part of it? I call this the fun part of it, and we would pay for that. But that's some scenarios we're looking at. We think the capacity is going to be high enough. I can tell you right now, if one of the contracts that we're looking at getting happens, we'll have a team within 4 months, probably just to run that one contract. So of at least 1 to 4 people is kind of what we've talked off the bat. So, and but anyways, it's we have the ability to scale. We're not anywhere close to our max capacity right now. So, yep. And people asking about the lag from the CAF unit. You can do this with PPL cases. So if a client walks in your office today, you can use an 8821 or a 2848. Call the IRS, have the transcripts delivered to your mailbox. You may be limited to 10 per phone call. But if you are limited, if they won't give you just a range of years, what I recommend you do when you call PPL is say, how many years will you give me? Maybe they owe for 5 years. What you can say is, I'll tell you what, why don't you give me, how many years do they owe for? You make it hard on them. Well, how many years do they owe for? Oh, they owe for this year, this year. Okay, great. I want those. Plus, I would like the wage and incomes for those years. And if I have any left over, I want the most recent ones to see if they're compliant. Don't just say, give me this range and be done with them. Say, I'm going to call right back. This is really what I need, is I need everything from 2005 to present. If you give it to me, you're going to save both of us a lot of time. And, be pleasant about it. We laughed about having a class on how to be pleasant to people at the IRS, but it's sometimes that does the trick.
I wouldn't call that class how to be pleasant. I would call it how to ask for things the right way with a high success rate.
Yes. So, and that applies to everything in life. So, as my wife will tell you, so that's kind of thing. You could actually get a tax mentor report within 48 hours, 48 to 72, but usually 48 hours, business days. We're not working on the weekends currently. And, so you could have this within, just 2 to 3 days.
And if you're limited to the 10 and that's all you can get, from my perspective, we need to see the ATs of the years with balances, and to get the most out of it, something that shows relatively recent income, whether that's a 2019 wage and income or a 2019 tax return transcript. ATs are great. That 100% has vital information that we need, but the next level in determining, how collectible they are, what we think their chances are of OIC or PPIA, or maybe they're CNC or a streamline, that wage and that income information, whether it's from the tax return transcript or the wage and income transcript, is pretty vital to that evaluation.
And given the choice between only one of a return and a wage and income, I would tend to go with the return, especially for a married couple, because you're only going to get one wage and income for one spouse, and the other spouse might have all the info.
And it depends. If they're unfiled, it may be that the wage and income is best bet.
Yeah. And eventually you'll need the wage and income. So my answer to you is use NQ, call multiple times, get everything you want that first day, and just get everything you need. So,
yes, Dion, that's correct. You have to have the transcripts in hand in the software in order for us to turn the report around.
Yeah. And Tax Mentor is not doing power of attorneys, 8821s, or any of that for taxpayers, if that makes sense. Well, all we're doing is you're getting the data and uploading it to us in an anonymous way. I mean, we know who you are, but all their identifying information is removed, and off you go in to the evaluation. And it's working very well so far. It's kind of something I've wanted to do for 5 years, and it's now, Catherine was the missing piece, and she actually is above and beyond what I had thought this would be. So I thought we were going to be doing just like CSET evals and, kind of my onboarding. She's taking it to the whole next level. So
quite frankly, what I'm doing is how I would approach a case in practice. And what I have is, I've been using Rogers software for about 8 years. So I'm used to looking at cases in this format, and it's thousands of taxpayers' information I've looked at at this point. And these are the steps that have worked for me getting from A to B to C the quickest.
Yep.
And that's what I want to provide to you.
And you want the next slide? We're
Please.
Almost done. We got 2 more.
Yep.
All right, and then we'll get into your questions.
More questions. Yep. So summary, just based on history, it's kind of easy to see why the IRS did not accept an OIC for this taxpayer. Now, this highlights one of the biggest problems in tax resolution is what your client says versus what the reality is. So this client is saying, oh, they denied us because of future income. I'm going to call BS on that. I think that was the least of the problems. They were not in compliance with their ES. They accrued another balance right before, right after they were rejected for the OIC, because 2019 came in with a balance too. And looking at their income and assets, I can't see, minus some really serious medical issues, I cannot see how they qualify for a doubt as collectability offer in this situation. I cannot see it.
But again, we can't see everything, so
can't see everything, but what I really think happens is in their conversations with the OIC examiner, I'm sure the OIC examiner, because this was a taxpayer submitted OIC, I'm sure the OIC examiner did bring up the lack of ES, did bring up their income and said, well, maybe the taxpayer tried to argue, well, we've had a drop in income this year due to COVID, even though they've been posting 6 figures consecutively for many years. So it's possible the OIC examiner said something, well, maybe you're down this year, but you could be right back up again in a few years. And that was probably the only thing that stuck in the taxpayer's mind. But I bet you if we read the OIC rejection letter, it would be more along the lines of, well, we don't see data collectability. We believe you can pay this amount and you're not in compliance with your ES. I again would bet money on it. So step one on this case, because this particular example came from a CPA, if I remember correctly. And when you guys sign up for Tax Mentor Group, you're going to have your own portal, and we're going to have some information in there regarding your levels of authority. Attorneys, CPAs, EAs all have kind of different issues that they've got going on. And so for a CPA in this instance, when I'm saying that there's a medium level of criminality involved here, I'm going to say, well, listen, not that I don't want you to take the case, but for your E&O insurance purposes, you need to have a conversation with the client about, there is potential criminal ramifications. I think we can, minimize them. I think if you can get on the right track, you're fine, but I would not be meeting my ethical obligations and my professional obligations if I didn't say you were free to seek a legal opinion from an attorney.
And then document that in their file that you mentioned that to them, because they may say, no, I'm not going to go talk to a criminal attorney. At that point, your decision is, do I take the case or do I proceed without Covell? Because if it goes criminal, guess who the star witness is?
Right. And I'm working on, in kind of some of the supplementary materials, I'm working on a sample letter for people to provide to clients in these situations. Basically your documentation of the conversation, but 100% document. That's your protection against a malpractice claim. All right. Step 2 is to call ACS and request this account be placed in the queue. They are 312,000 assessed, so well over the 250 assessed threshold for an RO to be assigned.
What if they were to pay 75 grand to get it down under? Would that be a strategy if they had it?
It could be, but quite frankly, if they had 75,000, I'd say please prepay 2020 and 2021 first, because actually you get the most bang for your buck out of that.
Gotcha.
Because if they took that 75,000 and bought their way down, but then, oh, I'm broke, I've got no money left, I can't pay my 2020 taxes, I can't pay my 2021 taxes. Well, we're right back in the same situation a year from now. I hate taxpayers who stay on the hamster wheel. I want to get them off when we can. I know it's not always possible. I'm not idealistic, but when I look at strategies, my biggest strategies, especially when they're getting to the point where an RO is involved, is that how can we find a way to get them into compliance? And right there, step 3, counsel the taxpayers on ES. See if there's a way to get on track for 2020. If not, because we're at the end of the year, make sure you get their 2020 returns filed ASAP, because there's going to be another balance due and you're going to want to try and get that included in whatever resolution you set up. And then 2, make clear, okay, well, listen, I've kind of given you a pass on 2020. 2021 has to be shipshape. Tight, no leaks. You got to make those payments. It's not going to go well for you if you don't make those payments. And that is a correct statement. With a revenue officer involved, it will not go well for them if they do not get on track and make their estimated tax payments in 2019. All right. Step 4, and maybe it seems weird that step 4 is further down, as far down as it is, but looking at 17 and 18, seeing if there's possibility for amendment or reconsideration opportunities. The reason I push this so far down is because it's not technically an immediate concern, and it's not something that's going to resolve itself quickly. Because you could spend 6 months dealing with that and not be dealing with the other things. You want to first get them into the queue because then they're protected. You're waiting on the IRS while they find a revenue officer available to work the case. And we don't need to be waiting 6 months to have these conversations about ES. Those are kind of your top two priorities: move their case to the next level with the IRS, and how do we get them in compliance with their tax payments. Then absolutely look at 17 and 18. Have the CB2000s been issued? Is there any opportunity to amend there? Is there reconsideration opportunities? After that, say, oh, okay, it's reconsideration. You get that sent off. Start doing the 433A. Look at assets. Include ES as an expense, whether they're making it not or whether they're making it yet or not. Couple of reasons. One, it gives you an idea of what their true disposable income is if they're paying what they're supposed to pay. Two, it's the IRS's job to say no to it. But three, it can also kind of illustrate to the client how important it is in their budget. Roger, did you have something?
No, I'm sorry, I hit my microphone.
Okay. And then, like I said, I would bet money that this taxpayer is well over standards. So look for opportunities to employ the 6 or 1 year rule when working with a revenue officer. They don't have to do that. 72 months or full pay, woohoo. That's an ACS rule, but they are allowed to do 6 and 1 year rules if reasonable. So, it's usually not reasonable for somebody to just change all of their expenses in a relatively short period of time. So keep that strategy in mind. And then my last step 6, before the revenue officer gets involved, is have the taxpayer begin making voluntary installment agreement payments based on that 433A. It shows good faith. They're going to start paying it down. Now, my caveat: if the taxpayer says they cannot afford both ES and the voluntary payments, ES, 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 ES. It is far more important than voluntary installment agreement payments. So, this case will probably get assigned to a revenue officer sometime next year. Minus there being some really dramatic changes in their situation that last into next year, I don't see them not being in some kind of large installment agreement. Now, it could be, and this is information that maybe the practitioner should provide it to me of, oh, well, they've lost 50% of their income due to COVID. Well, 50% of income and no chance to regain it. Well, that would make a difference, and that would have changed my strategy. So, your output is as good as your input. The more information you provide me, the more tailored the response is going to be, and to work as hard as possible to get you to what you're looking for.
Again, the customer expectation, it might just be, I need my passport back. I'll pay whatever they want me to pay, but I need my passport back, is different than I want to pay the least amount of money possible. So it's those are the things that are going to drive this is, and you getting involved in tax resolution. If you're new to this, understand, I remember one of the things that Tax Defense Network did when Catherine and I were with them. They came to me and they said, so one of the questions they asked was, how much are you willing to pay a month? Let's say we can't do the magic offer and compromise. What can you pay a month? It was the minimum acceptable agreement or maximum acceptable agreement. Well, we were running a little piece of logic that would calculate what the installment agreement was. And honestly, and it wasn't just TDN, it was other large organizations out there. They'd basically say, oh, they said they could pay 500, a full pay installment agreement is 420. Boom. We're just going to put them in a full pay. And we're not even going to try to get any of the other things, and in some cases, wouldn't even look at the FTA or anything. In other words, we met the minimum and they're going to be happy with this and we'll slide them into it. I like resolution where you still look to lower their liability a little bit as part of the resolution. Excuse me.
When possible. It's not always possible. I honestly, a lot of the times it's not possible.
Yeah, but at least take the look at the long-term look. Are there any audit reconsiderations? Is there those kind of things? But remember, they can get expensive. There's been more than one time where my dad's done an audit reconsideration where if he had billed what he should have been billing, he lost money. But again, my dad's a puzzle solver. I always tell people that, my dad's a puzzle solver. It's not how much do I make, it's how cool is the case. So he's gotten better in his older years thanks to my stepmom, but he's never assigned himself the value. It's always been the challenge. So
Well, and I can sympathize with that. There have been some cases I would have worked just for the fun of it, but fun does not put food on my table or pay my mortgage. So you gotta be cognizant of your bread and butter and paying your bills.
Yep, absolutely. And all right, so we're at the end. So there's the 2 questions that are up. I'll handle the link and handouts question after you handle the 5-year probationary period. I will say this about the 5-year probationary period. I think it's a revenue opportunity that a lot of people miss. And by that, I believe that I think you should be charging if they get accepted into an offer, at least for 2 or 3 years of tax returns in advance. And you'll call them every year and go, hey, if you don't do this, it's going to pop out of your agreement.
Yep.
Because the case
Yeah.
she just showed is not an offer. Even if they qualified for an offer, the fact that they're pyramiding, be real careful doing offers for people that are pyramiding, because
Right.
they're not going to change their behavior.
I used to have a rule with a lot of clients who I was putting in PPIAs. I was putting in partial pay installment agreements, and they were, they would ask me about an OIC, and I'd say, well, listen, make these payments for 2 years and don't owe any taxes for 2 years. Show me that you can stay compliant, because from where I'm looking, you've done nothing but owe for the past 10 years. And then in the 9 months I've been working with you, you've made 3 of your, you've made 1 of your 3 required ES payments. Well, that's just a recipe for disaster. Why would I set you up to fail at an offer, fail probably being accepted, and if by some stroke of luck they were accepted, fail at meeting the requirements? Because yeah, you have a 5-year probationary period, you have to file, and you cannot owe. It's not just, honestly, the filing the returns is sometimes the least of it, though some people do have those problems. And I do think there's a revenue opportunity there to have kind of a prepay for maybe a quarterly ES consultation, um, and prepay for the tax returns to try and keep the client on track. And I think there's great value there if they've just, saved 70, 80, 90% on their tax bill, and the threat of that whole amount coming back on them is hanging over their head. And by and large, a lot of the people who are going to fail at this are self-employed people. They tend to build bigger debts anyway. They're more likely to be eligible for an offer, and they're the ones that have the most trouble paying. Not that W-2 people don't, but more self-employed people have trouble keeping up with everything.
Yep. And I'll throw this out there. So on the handouts, I wasn't originally going to upload the slides, but what I'll do is I'll do my best to get the slides up right above where the videos will be. I posted the links in the chat. One is at the Tax Mentor landing page, and the other one will be at the Tax Help Software Best Practices. We're
going to try to turn that into a digital pamphlet too at some point here soon.
Yeah, and the first PowerPoint I'm not going to upload. It'll just become part of the new website. This is the TMG landing page. I don't have it linked anywhere yet. It's just the taxhelpsoftware.com/TMG. This is just kind of a placeholder until our website's finalized. It's definitely going to have the different feel than the Tax Help Software site. And but there will be some links between them. We have the sample consult report here, and there's the registration for here. So I will put this video probably in this box here where it says register for the live demo, which is today. So I'll just add the video here, and then when the website goes live, we'll move it over there. But it's also on the best practices page, which if you go to the footer is how you link to the best practices page for THS. And I'll put it here with the best practices as well. And again, if you're looking for a THS best practices, next week we're going to have one as well, and I'll change this registration link. And so I'll take this link down this afternoon and put up next week's best practice, and we'll go from there.
Is it next week or the 17th?
Maybe it's the 17th.
I think it's the 17th.
Yep. And I'll put up the date. We'll have the dates. We'll send an email out a week ahead of time on that one, just to give you, and I'll also put it on the Facebook page. For those on the Facebook group, it's just the Tax Help Software user group. And make sure you answer the questions. We're trying not to let people in that aren't tax people. So just let us know. Now, the good news is if you guys have any active tax questions, or if we've done a consultation for you, in the future, as we get going, you'll be able to submit questions in advance, and we may even do the meetings going forward where we can unmute people and actually have two-way conversations with you. But for now, if you've got any questions you want to ask us about any case, that's what this part is for.
And just while I guess everybody's thinking of some questions or typing them in, we are doing a webinar tomorrow on CPA Academy. I believe it's at 1 p.m. Eastern. It's listed on the landing page. It's going to be a just quick 1 hour, really just talking about where the IRS appears to be going with collections post-COVID, and analyzing the Helping People initiative that was just released last month.
Oh yeah, and the one thing that we forgot to mention, I'm pretty sure, so we're going to have a end of the year special. So basically the first people sign up. So for THS users, we have it at $747 for 1 year. All right. What we are going to do though is we are going to offer anybody who signs up before the end of the year, and that order form will be available between the week of Christmas and New Year's. We'll actually do $697. We'll get you a 1 year membership to Tax Mentor. The full 1 year. We'll take an extra $50 off for the initial folks that sign up, and off we go. I think there's going to be some other things that we offer with the package. Like right now, there's not a lot of questions coming in about cases, and I think part of that
answered
is
them all already.
yeah, and there's not a lot of cases out there. The IRS is just now ramping back up. We expect this to quite frankly start spooling up in the near future.
In January.
Yeah,
Somebody brought up that the trailer's full of mail. In a testifying before Congress back in October, Commissioner Reddick had said they were down to a few million pieces of mail, and they were at like 11 million over the height of the summer. So they had made progress, but they were still getting 500,000 pieces of mail in each week. So my kind of guess, based on the progress that they were at with October, and they've not made any releases, is that they are probably going to get through the backlog here. Either they've probably are just about finishing up, or they'll be finished up before the end of the year, which coincides with, usually right about now is when the IRS is announcing when they're going to put their moratorium in place for, non-holiday levies, and because they do their system updates at the end of the year. I fully expect that, come mid-January, assuming system updates go good, knock on wood, there is always the potential for those to shut us down, that come mid-January, they're really going to start gearing up. Everybody got a pass in 2020, but come 2021, if you haven't submitted your taxpayers who haven't submitted their hardship requests, they can start to see some levies being issued.
And we got our first question. Before we
Yep.
jump into the first question, I think you're going to see the IRS employees are going to be some of the first to be immunized because they are necessary. So as the government starts to prioritize, obviously that group is going to be one. I mean, is it as important as the military? That's not my decision to make, but I can tell you they will probably be not, at the top, but probably one of the top people that they'll start getting. I think you're going to see COVID start winding down through 2021. I'm not planning on doing any trade shows next year. However, with that being said, in 2022, we'll ramp back up and start doing the trade shows again. I think the whole world's still going through a flux for another 6 months to a year. And I think the IRS is learning to do remote better. They're about to do the online POAs. So, stand by for some more information. That could be a game changer for this community. And we're trying to stay on it. I think the first iteration of online POAs is going to be terrible, and I think it's going to get better as they move along. Couple things I wanted to show everybody. So the CPA Academy link, if you go to taxhelpsoftware.com and click on support and click on tutorials, it'll bring you here. We currently don't have 15 hours of CPEs between now and the end of the year. We've done them over the year. Okay.
Probably more
But
than.
some of them are archived, like our first time penalty abatement for those that are wanting. But you can do the THS CPA Academy registration link right here. Let me click that, see where it takes us. So here's our upcoming webinars. You know, we have IRS COVID response that Catherine's doing, demystifying Circular 230. It's a paid ethics class for $40 for 2 hours. And then she has her after lockdown looming COVIDs and all the available dates here. I'm trying to do another first time penalty abatement one before the end of the year, but quite frankly, CPA Academy has filled up quite a bit. Our archived ones are here. So any of the presentations we told you about are available at CPA Academy under archived. ASTPS members, you have access to some of our archived ones, some of the same webinars. Eric's group, I think, has some archived webinars as well. But either through CPA Academy or one of your memberships, there should be some of these archived. You know, here's our ASED, RSED, and CSED class. I don't do this one for free anymore, but it's available for a little bit longer, and then we're going to have CPA Academy take it out. Okay. And that's the statute of limitation class. If you have any of those questions on here, and just some really good classes that are still here and available. So
Right.
next we're going to get going. Tom Bridgman has a question. So I'll let you
I'm looking at
that.
So yeah, Tom, there is 100% a way to submit your returns directly through ACS. You have to fax them while you're on the phone with them. So if you don't have a fax machine, that may be problematic. But I mean, I've done this so many times, I've lost count. As you fax them in, you ask them to pre-assess the modules. I've even had some instances where I've told them, hey, they're already in the mail, and gave them information off the front of the returns, and they would pre-assess them as well and allow you to get a pending installment agreement coding on the account. The only problem you run is if for some reason those returns don't get processed within 60 days, the IA may default. The pre-assessment coding on the modules is only good for a short period of time. But if you've got a fax machine, 100% worth a try. Call them up, say, hey, I'm calling to set up an installment agreement. They're going to do your disclosure. They're going to run a compliance check. And when they say, well, hey, these returns aren't filed, you're like, well, I have them ready, but e-file's closed. I can submit them to you right now while we're on the phone. So I hope that answered your question.
Yeah, and let me throw this out there. So the same portal they use for 2848 and 8821 is something the IRS is supposed to start rolling out as a general replacement for fax. Okay. Is it going to happen next month? Probably not.
Probably
but
not even next year.
They're going to really try to expand it next year. They realize it's so bad with fax. But the problem is when you're talking to a specific person at ACS, how do they get an upload directly to that person? So there are some technical limitations to it, but you're going to see more and more upload portals versus faxes.
And yes, they said it. I don't generally have high expectations of IRS meeting self-imposed deadlines. Maybe that's cynical of me.
Now, with that being said, the upload 2848, they have a date in January, and according to Sharon Fisk and everything we've gotten, you will be able to upload a 2848. But honestly, bear with me on this.
I am so scared of them getting rejected.
Yep, but bear with me on this. Looking at the criteria of validation, if you continue to get POAs the way you do now, where you send it to your client, they sign it, scan it, send it back to you, and you sign it, you have less validation requirements because it is a real signature. The e-signatures, the IRS actually wants you to either get on a Zoom conversation or get a screenshot of their driver's license and a selfie of the client. I kid you not, this is what is being proposed. The one good thing is this: if you do somebody's tax return, you are considered to have an established relationship with that person, and you don't need to do the selfies and the driver's license and all that. You have to verify it's the person you're talking to. So maybe a phone conversation or a communication through their email that you've established as theirs. So if you have a prior relationship by doing a tax return for them, what they haven't defined is, what if I'm submitting a tax return right now? Can I also get to sign 2848 because I'm doing their tax return. They have not answered that question, and it's been directly posed to them. But if you did their return in the prior year, you can basically say, I have an existing relationship, get the DocuSign or e-signed power of attorney and upload. What we're looking at doing with THS is we're looking at adding a signature block on our 2848s and figuring out how to get it to the client. However, right now with the way the validation piece is, I don't know what we're going to do yet. So we're waiting to see what the IRS does to figure out, because getting the signature turns out to be the easiest part of this process as it's been described to me in the focus groups. So just be advised, this is not going to solve everybody's problem. The
And
one
it's
that's going to
temporary.
solve the problem better is the one in January, or I'm sorry, in June of 2021. They're supposed to launch an online validation, which will use their cell phone just like us for e-services. It'll suck. Yes, it'll there's no other way to put it. It'll suck badly to get them verified. However, once the platform's up, the IRS is going to improve on the validation through some other processes that they're still working on. And I hope they're available at launch time. That will increase the success rate of people validating their identity online. So there is hope coming, but I don't think January is going to change much of anything. Our current recommendation to the large companies that have reached out to us for consulting services is continue to get signed POAs and 8821s via scan and an ink signature, because there's less validation because you're capturing an actual signature. So hope that helps. And surprising, so Laura's telling me that she continues to get case consult questions from users of all walks of life. So I thought for sure we would have more specific case questions. It's kind of the one thing we've been trying to get away at THS, because we don't have E&O. It's not what we're geared up to do. But does anybody else have any other questions? Also, general questions about practice management. I've managed some pretty big tax franchises. Catherine's managed some teams. So, we're here to answer whatever questions you guys want about, anything that's going on in resolution of taxes right now. And if we don't get any, we'll go ahead and call it quits unless Catherine's got something else.
No. Their stakeholder liaison is hosting a webinar a week from today on the January process for e-signature validations. If anybody is interested, I know Roger is attending. I'm also planning to attend.
Yeah, and I'm cringing telling people about it because I think it's going to create more questions than it's going to answer based on what I've seen so far. So it's, we're going to get a statement out after that class to everybody. So please don't fire your questions off to me immediately after that webinar. Give me an afternoon to digest and send an email. The class that you're asking about is, I don't know where the link is. It's if you Google IRS 2848 e-signature webinar. I know that's long. My son makes fun of me because I put too many words in a Google search. I think it pops up. Yep, webinars for tax practitioners. And I think it's the first or second. There it is. So it's this one. And I will copy link address and I will put it in the chat box. There you go. That should be the registration. I've heard rumors that it may have a 2,000 person capacity and it may fill up. It seems like everybody's going. And you've got a couple of more questions.
Yep. Let's see. So E&O provider, I mean, that's a very personal decision. What I've always recommended in the past is reaching out within your state or community groups and asking who they use, because you'll know your rates will generally be similar within that area. So if you belong to a state board of accountancy, ask them. If you are a local EA, ask other local EAs who they're using. We use the Hartford, but I don't know whether that would be beneficial for you.
Yeah, and we did a quote through Hiscox, and we kind of look at the benefits and the coverage, but it's different for different states. Insurance is by state, and some are national, but that's just who we use is Hiscox, I think, for one, and Hartford for another. And it kind of boils down to sometimes they farm it out. So it's I hate shopping for and I wish I had an easier answer. I've never had an E&O claim, so honestly, I can't really attest to are they any good, because until I get sued for something, that's where you really find out, is your insurance company worth it. So
And Catherine, you've got some questions here. I'll let you.
Yep. Dion, that's actually a very interesting question. I'm assuming they're letting that money roll over into their basis. You've got an uphill battle, and you've got to make sure it's not they may not have taken it last year, but have they taken anything this year? And there can sometimes be a gray line in there if they're a closely held corporation. If they are receiving a wage, that's going to go a long way, especially if that wage is showing that it's covering the reasonable living expenses. What I would do, what you're going to have to do is you're going to have to show that there's no other income coming in besides what you're claiming. So that's going to require probably bank statements be submitted. So this is going to be a large document dump on the IRS. I would also provide balance sheets showing the accumulation of the monies being diverted back into the company.
Catherine, real quick. I don't know that everybody can see the Q&As. So one of those things, and somebody had recommended me, they can see the chat window, but I don't think they can see the Q&As.
Gotcha. I'm sorry.
So on the Q&As, definitely start by reading the question, and that way everybody knows what page we're on. And I just realized somebody had mentioned that last time.
My apologies. Yeah, so Dion brought up that she's got a client who is a shareholder in an S corporation. They get income that they're paying taxes on, but they're not taking the distributions. They're putting them back into the company and increasing their basis. So that's why I kept talking about basis and balance sheets. IRS wants to include that income on the 433A. So you're gonna have to prove the income's not there. The basis in the company is also an asset that you'll have to do on the 433A. This would actually be a situation where I would prefer to have a revenue officer than working with ACS because they're more likely to understand it. It's a lot harder to explain concept or complex concepts like this to ACS. So you're gonna have to data dump them and document dump them. And all right, here's my bank statements. This shows nothing coming in besides the wages that I'm claiming, and you may have to go back the whole year to show it. Here's the balance sheets. Look, show you the money's going right back in. It's helping to make the money profitable. It's in your best interest that the company is profitable and growing because it's going to increase your chances of collecting down the road. You're going to have to wear them down probably.
And I will say this. I've talked to people that are like, I don't understand why the IRS gets it right. It's a separate entity and all that. There have been documented examples at the IRS where people basically wouldn't take large distributions, hoping to leave it out of their collection information statements. So if you think about a company that might have $200,000 of profit ready to distribute, sometimes, especially when people do self-resolution or maybe even, newcomers, some of the thought is, well, that's needed for expenses. And it might be, but you're going to have to prove it. The IRS wants to look behind the scenes of pass-through corporations to make sure that, there isn't income being hidden from the information statements. I get that question a lot, is why I'm piping up that why would the IRS care how much money's in an S corp? And I'm like, well, think about it. Somebody could have $200,000 or $300,000 waiting on a distribution, but they're saying it's necessary expenses, and that's why the IRS wants to look. Do they look every time? No. They should, but they don't. So,
and if you're dealing with an ACS rep, the thing they do is they go look at the last tax return and the last wage and income, and if the income's not matching up to what you're saying, that's why they're asking. They're asking the question. That does not mean that is the definitive answer on income and proving income. But when you're taking this position, you're going to have to be the one to bring the documents to the table showing why the income you're saying it is. And they can't just say, well, it doesn't match the K1, so we can't take it. No, they have to look at what you provide them. It's just going to take more work because if you're in this unusual situation. And there are reasonable causes why somebody wouldn't take money out of their business, especially if they're a newer business. You're going to plow the profits right back in and try to scale and grow your business. It's not unreasonable, and it's not something that should be unexpected. Again, your knowledge level, if you're dealing with an ACS individual versus a revenue officer, most of the time you want to avoid an RO, but this would actually be one situation where it would be easier to explain to an RO, assuming all the documents line up. Okay. I enjoy the potential of THS and TMG. The challenge is business development to make these costs worthwhile. What practices business development tips could you share? And I'm curious to hear of Catherine's state resolution advice.
I can answer the first
Yeah,
part.
Roger, you answer the first one, then I'll do the second.
Okay, so I'll go first. So one of the things we've talked about is eventually doing some things around marketing. Part of our bankruptcy course that we did last year or earlier this year, we showed how to get a list of people that were coming out of bankruptcy, very similar to a lien list. However, the addresses are guaranteed to be a lot more accurate. Okay. So there are some tips we can advise, but for people just getting into tax resolution, I can tell you the primary place to pick up cases is through referrals from your existing clients and your existing clients. As far as the things for marketing, not really where Tax Mentor is going to operate as far as, how to get the cases so much. We are going to offer some things where you can develop your internal clients and that kind of thing. But, the things that like Michael Rosberg teach, and I know ASTPS has some marketing info, and Eric does some wonderful marketing stuff too. There's a wide variety of things out there, from lien lists to billboards to radios. It's not where we're going to go into it. I can kind of, as a member of Tax Mentor, if you reach out to us and say, hey, I did so-and-so's program and the recommendation is this, we'll give you our honest feedback, especially if you ask it during this. I think radio advertising is one of the best things you can do. However, you need to be prepared for the level of cases you're going to get from radio. So is your practice ready to take clients? And, one of the biggest advices I get from people starting out is make sure that your phone is answered 24 hours a day. And, Catherine, I know back at the day, the big resolution firms have phone banks that are open 24 hours, and the marketing changes based on who's up. Like, housewives are the daytime people that are going to call because their husband's in debt. And, your single guys and truck drivers are the guys that are late at night. The leads come in at different times of day. I would post things at your church. I can tell you what I call the low hanging fruit. You post at your church, you post at your local your business things. It's hard with COVID, but they should have gone virtual. Like your chambers of commerce. I know a lot of people used to go to the Chamber of Commerce and say, hey, let me run a tax help software report on your business, because did you know that 25% of businesses go out because they screw their payrolls up in the first 3 years? There's plenty of those stats online. Come up with a little marketing campaign. And basically, I will tell you, if you start marketing for business clients, just somebody called me and said, now I got all these people wanting me to do business returns. Yes, if you're going to market to business people, you are going to get business returns. It is hard to find people to do business tax returns in some states and cities. So we'll share with you the advice we know, but as far as saying, hey, we're going to teach you how to do, website funnels and clicks and all that, that's not something that we're going to go into. Not that we might not have a guest speaker. I'd love to have somebody like, if Michael Rosberg wants to come on as part of one of these and just kind of, throw out some free advice and pitch his services and answer some of your general questions, we'll do that. I would love to have Eric Green. I'd love to have Larry Lawler, LG, Steve Klitzner. Some of those people come on and kind of be the guest speakers. And in exchange for that, they're going to be able to offer, the attendees the ability to come join their organizations, or Andrew with NQ. I'd love to get Andrew from NQ on here to answer all your e-service phone calls, because there's a lot of misnomers about what NQ does in the industry. So I'll hand it over to Catherine about the state resolution advice.
My only follow-up to that would be how we advertise and get leads is different these days. So I think just being available through social media platforms will do a great deal of good for you. That's if somebody can reach out to you on your Facebook business page or your LinkedIn business page, it might, so just making sure you're available to answer.
Yeah. So our experience, Catherine and mine's experience, along with Fred actually ran, the largest tax resolutions, kind of the online marketing for years. And, he's been out of the game a little bit, but it hadn't changed that much. We can more offer advice on things that you're thinking about. So I could definitely offer where we all network our, the membership comes together and we all network on stuff. I'm more of I can tell you what I know doesn't work. And, I can tell you if somebody offers you leads that it's probably been turned down by some of the big resolution firms already. And, the little known fact, people that are buying leads like the big res firms do, sometimes they have 20 seconds or 30 seconds or sometimes 45 seconds. It depends what they do. And what they do is they have 45 seconds on the lead phone call that's forwarded to them to terminate the phone call so they don't have to pay for the lead. So in other words, they need to quantify the client to figure out if it's a good lead. And if they get rid of it, they don't have to pay for it. So you may be getting some of those leads through other sources. There are probably more websites that offer tax resolution. They're referral sites. If you ever see these late night TV people and it's some resolution firm you've never heard of, read the small print. Sometimes it says, hey, we're a business referrer. We don't actually do the cases. There's probably more of those than people advertising tax resolution. They're called lead generation. They're good at what they do, but if they offer to sell you leads, they've probably been stepped on and the quality isn't there like it used to be. The other big things the resolution firms do is they always sponsor talk radio. If you listen to Patriot Radio, Sirius XM, everybody's advertising on there. Jackson Hewitt was advertising tax resolution yesterday. So you've got different people advertising in different spots, but the biggest sources have been pay-per-click, which is super expensive. My guidance on pay-per-click is this. There's two words in the English dictionary that are 3 letters and they end in X, and they're 2 of the highest search terms. One is sex and one is tax. So pay-per-click, unless you're going to have a long-term strategy, is very, very expensive. Social media is probably one of your best, like Catherine said, your existing clients through your church, through the local business communities that you're in, and you would be surprised. I think everybody that does marketing says the first person you should look at is your internal clients. Who, and some of your internal clients are actually going to people to get tax resolution because they don't know that you offer it. So the number one search term, or at least,
and they would rather get it from you.
yes,
Those people that go to the big resolution companies would rather get it from you. The one of the number one complaints in the resolution companies is, you're not local to me. I have no idea. It's a lot of trust to give to somebody on a phone thousands of miles away, as opposed to their tax preparer that they know.
yeah, and that's it. You being local is your number one sales point over a big resolution.
100%.
I'm here, I'm local. The big res firms know it's something like 75 or 80% of the people will not go to somebody out of state. It has to be somebody local. So they're all vying for roughly 25% of the tax resolution cases that are out there.
Yep.
And, there's the number one search term for people with tax problems is tax attorney. So I used to tell people, put on your website that I'm not a tax attorney, because it would show up as a keyword. So, you put it where keywords are. I know keywords have paid, less potential to where it is. But that's all, it's all simple things that you need to have out there. So I guess we're more somebody to bounce ideas off of than actually. There aren't any more great marketing ideas for tax resolution, in my opinion. I think they've all been worked over because there's very smart people with a lot of money that have been looking at every angle. And Google just made it harder on pay-per-click anyway and said that we're considered, or people in tax resolution are considered debt resolution. And unless you're a .org, you can't advertise, or something along those lines.
For the tax res companies, I'm not sure that applies to individual professional firms.
Yeah, and it gets gray though. I know. Yeah, and we've had people complain about it, but yes, there's been so many restrictions. So I could see us more being a network opportunity to see what's working amongst your peers than actually, hey, buy Rogers all-purpose tax resolution roadmap. I'm not going to teach you how to do that. The cases are out there, and there's different strategies, but what works for one person in North Carolina is not going to work for somebody in New York.
And so the states, obviously, you'll work primarily with the state that you are in, and you'll get an idea for what they do. As a general rule with the states, what I find is that most states want to be paid in 12 to 36 months, the balance due. I've seen some as low as 6 months. Thank you, Alabama. And you've got states like North Carolina and New York that'll go up to 72 months, kind of mirroring the streamline program that the IRS does. Opportunities for partial pays and OICs with the state are rare. I'm not saying they're impossible, but you're going to have some pretty extreme situations for that to happen. New York has an offer and compromise program that they run it very well. And I would say they probably do more offers than a lot of other states do. But if you compare their criteria to the IRS's criteria, they are going to be more strict. And just because the numbers show something doesn't necessarily mean that's what it's gonna be. They kind of actually look more at the age of the debt. So the older the debt is, the bigger chance you have of not getting something, or if you're out of state, because it's that much harder for them to collect. And that's really the key of, and the reason why the states are so difficult to deal with. They don't have as much collections power as the IRS. So if somebody moves out of state, it gets a lot harder to attach their wages in their bank accounts. Not impossible, but harder. Whereas the IRS, it doesn't matter if you move to a different state every year, they've got the same amount of power to reach you. States, in terms of creditor priority, are listed beneath the IRS, so they know that they're the ones that will get passed over in favor of IRS debts in instances of bankruptcy and foreclosure and things like that. And then secondly, there is a big difference to how states operate. Most have requirements that they have balanced budgets, whereas the federal government does not have that requirement. So there is more pressure to collect money at the state level because, quite frankly, they can't write a blank check on their treasury. The money has to be there. So for that reason, you see them acting quicker, acting more aggressively. They will levy somebody sometimes months or years before the IRS gets around to it. They're going to do substitute for returns so much quicker than the IRS does. From a resolution perspective, make that something you do early on. If your taxpayer or your client has state debt, get in touch with the state and see what it's going to take care of it. Don't necessarily accept the first offer. Well, we'll take 9 months. Well, listen, my taxpayer, that's really hard, and we know we're going to have this IRS issue to deal with. Can you do better? Can you go 15 months? Can you go 18 months? Sometimes it works, sometimes it doesn't. But don't approach it the same way you would an IRS case. Don't approach it thinking that you're going to get them a CNC, or you're going to be able to, get them a partial pay. It can happen, but it's not the majority.
And I will throw out there, the state CSEDs sometimes are forever, or they're 20 or 30 years.
Mm-hmm.
So they may outweigh you eventually. So
or some have really short CSEDs, and that's why they have to collect quicker, and they'll move to foreclose on you quicker, or foreclosure lien down to judgment. So they're going to be more aggressive. They're going to want their money sooner. You're going to have less options.
Yep.
Not fair, but that's the way it is. Real quick, to follow up on that first question we were talking about with the shareholder who's not taking the money, Deanna put in a little bit more information that it was not a IA request, it was an offer, and you're in the appeals status. So I think your problem there is not necessarily income, but it's your RCP and the future expectation of income. Because while it may be reasonable for a couple of years to continue plowing money into, back into the business, the eventual expectation is that you earn that money, and you're going to take it and you're going to use it. So when they're looking ahead to what their reasonable collections potential is, well, yeah, maybe right now you're not making it, but there's the expectation is that you should be in however many years. And then if they plug that into their calculation, that may be why it's getting rejected. I think really your only way around that would be a collateral agreement. If they're willing to do that, where the agreement is the offer is agreed to as proposed, but with a collateral agreement of X amount due at certain income markers. That's really the only thing I can think of in that OIC situation. So I hope that helped. All right.
Here on
on-
this one, while you're reading it, I already read it. So let me start with a couple quick questions. It's definitely going to be for you, but you don't need to wait to upload to join Tax Mentor. All tax help software users they already have access. The Tax Mentor button is
Upload it
in
now.
there. Yep, and it's free through the end of the year. So upload your case. Don't upload all 300 cases, please. I'm not asking you to overload us, but 2 or 3 cases between now and the end of the year, by all means. We're still getting our process and procedures in. Catherine's done it a lot faster than I thought we were gonna get it done. And so you're welcome to upload it now. And then Catherine, as far as I'll cover what I know about the 1099. Generally, if a company files a 1099 and they do it electronically, which I believe they have to now, it should show up within a couple weeks. With 1 to 2 weeks, it should show up on the wage and income transcript.
So this question is we've got a non-filer from 15 through 19. RO was assigned, and the RO, because no response was received, has sent those 15 through 18 off for SFR preparation by the exams department. The practitioner has the information, is working on the returns, or at least working on 2015. The hiccup is that the 2015 wage and income transcript is missing a 1099. However, the practitioner has that physical copy of the 1099 that the taxpayer provided. How long does it take the IRS to update 1099s? And I assume I must report it, though it wouldn't be reported on the IRS SFR. Yes, now that you know about it, you must. You've got to put it on the tax return. Whether the taxpayer chooses to file that return or let the SFR ride is their decision. You cannot influence it in any way. It is your Circular 230 obligation to say you are supposed to report all of your income. But you as a practitioner, you cannot prepare a return that doesn't include that income because you know about it. And what probably happened, honestly, somebody probably made a mistake when they were sorting out the batch 1099 information, and it just didn't get uploaded to that taxpayer's account. It does happen. For those of you that that don't know the behind the scenes, all the W-2s and W-3s are uploaded to the Social Security Administration, and they're uploaded by employer. And the Social Security Administration batch sends them over to the IRS, all under the employer's EINs. And then they have to individually sort out and assign them to individual taxpayer SSNs. Same thing with those informational returns, the 1098s, the 1099s that all get reported to the IRS. Those get batch uploaded most of the time. I mean, think about how many 1098s a bank uploads in a year, and they're uploaded under that bank's name. And then they have to go through them. And I know they have automation programs in there, but they have to go through them and batch them out, each one individually to the taxpayers. So I would include a copy of that 1099 if the taxpayer decides to file, and they'll possibly update their records, but I would say it's probably going to fall in low on their priority list, truth be told. But yeah, do go ahead and upload that through THS. There's that portal, and I'll take a look at it for you.
And mention the 1099S and how much it's for, so we know if it's not on the transcripts. And I will say this, having managed a tax practice for the better part of 6 or 7 years, different sizes, one of the biggest problems was people would bring in tax documents for different years, but they would be in there for a 2018 tax return and they're handing you a 2016 document. Make sure, you probably already have, but make sure that document is for the year you're thinking it's for and not another year. That I've had that simple, just because it was handed in with a group of other documents for 2019, that's something that you would want to be aware of. So back to Catherine.
Yep, and Dion, just follow up. You mentioned that back to the shareholder and the basis issue with COVID. If you've got justification of income reductions and expectations of income reductions, put that in front of the appeals officer. You're going to need to show the P&Ls. You're going to need to show what the expectation is there. And I think from a negotiation strategy, bring up the collateral agreement. The IRS is willing to wait if they don't have a good feeling about it. And so again, I really think, your collateral agreement's really your only way you're going to get out of there. All right, Tom, taxpayer is a limited partner in a private partnership. got 11% interest inherited from his mother. He's a limited partner. He's a non-involved partner. Last 3 years of K1 show about 19K annually in income, an ending capital account of 40,000. So quite frankly, not necessarily worth a lot, not minute, but not, hundreds of thousands. Doubt he can sell his interest to anyone except family, and he wouldn't want to. I don't know if he really has any cash balance he can withdraw. He's making delicate inquiries. How does this type of asset get handled on the 433A? Well, for one thing, it's what we call an income producing asset. If he's actually receiving that 19,000 annually in rental income, that is something that would go on the 433 as income. Obviously, you want to make sure you account for what he needs to be paying in taxes on it. But if it's an income producing asset, chances are the IRS is not going to ask him to liquidate it. If it's difficult to liquidate, and you really could make a very strong argument that this has no capital value or cash or quick sale value because he's a limited partnership and it's a very closely held partnership, you're probably fine. Your biggest question is who's asking the question, who's reviewing that 433, and how much does he owe? If there is a revenue officer involved, you might have to face more scrutiny. If you're just at the ACS level and you're offering an installment agreement and including that 19,000 as income, and it maybe even if it's partial pay, that 19,000 probably translate over however much time is left in the CSED probably translates into more money in the IRS's pocket than even if he could cash it out for 40,000, which is a very doubtful liability. And IRS has a mandate in general to collect by the least intrusive means possible. And ACS, double, triple, quadruple that because they just don't have the ability to follow up on things like that kind of liquidation. So it's always a big picture. I won't say for sure that you're fine, but 90% chance you're fine. Just report the income and see what it shows. So I hope that answered that question. Roger Abraham has a question for you.
I'm trying to think if there's anything on a transcript that indicates state debt or state problems.
Only thing you would see, maybe on a tax mod A, you might see when a state sends a refund offset request.
Yeah, I mean, it would be a refund offset request, I guess, would be the only thing.
You see when the IRS sends out refund offset requests as a notice, but you wouldn't see when refund offset requests came in unless it's on a tax mod A. And that's the only indicator you could have that the state's looking for money, is that the refund offset letter from the state to the IRS, because it's a two-way street.
Yeah, I don't, there's nothing from the state on there. The state gets everything at the IRS. And they tend to react from that as opposed to the other way around.
They have sharing programs. They'd share a lot of their exam information, but they're not interested in each other's collections. They do it from a compliance enforcement perspective of sharing income between each other, so both they can double check and make sure they're reporting the same amounts. The taxpayers reporting the same amounts. So they don't. IRS doesn't care how much you owe the state because the IRS is going to keep your money, and vice versa. State doesn't care how much you owe the IRS. If you get a refund, they're keeping it. So that's just not something they've built to share. And the states are not at the same level of electronic resources as the IRS. They've made progress, but their systems do not communicate with each other, and they do not communicate with the IRS. They're state specific only. So there's no uniformity across the country.
Yeah, and we'll answer live, done. And then you're welcome.
Very welcome.
And we'll give it another minute. If anybody's got any questions, I posted the Facebook link in response to a question, and then the chat thing. I'm not in there every day doing the membership stuff, but I'll try to get in there this week and get some people approved. Remember, always put you're a THS person and you're an EA CDP. If you just say I want to join and not answer anything, I don't go into our database and see if you're in there. I you got to tell me it's those things are hard to manage, but we do try to limit it to actual THS users. So. And well, let me ask you this question. It's one I'm answering on Facebook. All right, CDP versus an equivalency hearing. Do you believe a CDP carries more weight because the people you're dealing with at the IRS understand that, if you don't get your way, you may just go to tax court and get it there, versus an equivalency hearing where they know that's not an option for you?
No, not in my experience. Though, to be quite honest, most of my clients have never had anything worthy of going to tax court. The level of review between a CDP and an equivalency hearing is the same, and it's conducted in front of the same personnel, and that personnel is still answerable to their manager. If I don't like a CDP decision that comes to me from a settlement officer, I still have the right to go to their manager, who would hold them accountable to the decision either way, whether it was a CDP or an equivalency hearing. I utilize CDPs from a strategic perspective, and I generally find that it's very rare I file an EQH, quite frankly, because I usually get the CDP rights in and then withdraw them when I'm done, if that makes sense. But I've never had a difference in attention or decision between a CDP and an EQH.
Makes sense. And these are just the questions that come to us. I'm trying to think if there's anything else out there that's currently.
Yeah. Well, and Aaron, I'll elaborate while you think on that. Is from a strategy perspective, I find that when I'm working with revenue officers, if I file, because a lot of the times when a revenue officer gets assigned to a case, one of the very first things they do is they file that final notice of intent to levy with collection due process rights. Is I get that CDP filed, I tell them I want them to hold on to it, and they are allowed to hold on to it for 45 days before they have to forward it. And the goal is to work it out with the revenue officer, and that's what their goal should be as well, and that's the pressure they get. What it does is it makes them work the case quicker. So anybody who's experienced working with field officers knows that that is a blessing if you can get them to work a case in 45 days. And if they don't, or you don't like their decision, or you came to a bad decision on asset liquidation, that's another instance where I'd use it, is if I think the RO is going to request liquidation of assets and I don't agree with it, go ahead and get my CDP in. Because the settlement officer will override them in a heartbeat if I provide a good enough argument. But you can always withdraw down the road. And so from a strategy perspective, I found I could get my cases work quicker by doing it, which was good because the less time you input, the more money you make. Hope that made sense and wasn't rambly.
Absolutely. And let's see. Our email, and both our emails are just Roger and Catherine. Catherine spells her name a little non-standard. It's not the standard way, so just be advised of that, but it's at taxmentor.com. And I think we've got info at taxmentor.com. We just set them up this week, so we're still in the process. All the THS emails work as well. And so anything you've gotten for us. So I hope that helps. And if that is it.
Hey, Roger, what about that? Lauren asks, follow-up CDP, you can forward to RO timely and ask them to hold me on the deadline by 45 days. Yes. So say I filed day 29 of the 30-day period for a CDP, I can ask the revenue officer to hold it. I don't say, hey, listen, I'm preserving my rights. I want you to hold on to this. My intention is to work this out with you. What they can do is they can hold it for 30 days plus a 2-week extension, or a 1 month plus a 2-week extension. Before they are required to forward it on. But they put the CDP coding anyway, so you're protected from collections. And because they're up against that 45-day max window, they're going to work your case quicker. And then you can withdraw it. So, and you're welcome. So it doesn't always work. And the flip side of it, and I even mentioned this to someone I was emailing with yesterday about a consultation, is that if the CDP does get filed, okay, we go past that time period, or the RO doesn't want to hold on to it, and it gets in the pipeline for a settlement officer. It is much harder to withdraw it after the fact once you hopefully work out your resolution with the revenue officer. So you might lose time, but my thought process on that is that you're providing really good customer service to your client by keeping their options open, advocating aggressively, and keeping them protected from collections. So I think that risk is outweighed by the benefits. So.
And I think that's it for today. We'll do another one of these. We'll start these in the bi-monthly for January when we get going. Only input we looked for on top of what we've talked about already is day a week for these things. So Friday always seems to have a lot of stuff on it. Everybody tends to do these things on Friday. So we tried Thursday this week, but we're open for suggestions. Would Monday even be a better day? And just let us know. And we may do one early in the week and the second one later in the week. So if that helps at all. And of course it has to be middle of the day for both East Coast and West Coast. And I hope everybody found it beneficial. And again, we'll send out the invitation to the early discount between Christmas and New Year's. And we're looking at ramping it up for real. I mean, you're getting real consultations. There's not much level difference between what you're getting now and you'll get in the future. But look at your practice, look at your time flows. And if it's just wouldn't you rather have that time? The cost of each of our consultations, the cost runs about $30 something a month. So it's really hard to compare that value, even if you were to do it yourself. So, and Thomas says not Wednesday. Yeah, Wednesdays I wasn't planning on. Wednesdays like church day for some people, and I know we've got the kids going to activities on Wednesday. Wednesday always seems bad for everything. So, but
Great.
we appreciate everybody. And again, I'll post these on both the TMG landing page, the new website when it launches, and on the THS best practices. And everybody have a great day.
And remember, if you haven't tried it yet, try it now. You got a case you want to look at, even if it's just you're playing around in your system. Upload it to us, and we'll get you an example so you can really see how it applies to your client.
And right here, just where it says upload transcripts to TMG, I will tell you this: after we do the update over the weekend, you're going to be able to, I think, go into tools. So if you downloaded the transcripts manually, we've had a few people that downloaded them manually and didn't use the software for whatever reason, or had them before they had the software, or use a competitor. So that's going to allow you to import transcripts from just a file or just a folder directory. So that'll give that little extra, thing to get some transcripts uploaded to us. And with that, everybody have a great day. Have a great weekend. And
thanks, everyone.
We'll talk to everybody soon.